Enough of that. Hello, everyone. Good morning, good afternoon, good evening. Man, it's one of those days that'll make you smirk. It's one of those days that'll make you smirk. Give you a little smile to your face. You know what I mean? You know what I mean? One of them days that'll make you smile. Get a good old chuckle out you. On a quick side note, before we get into it, funnily, weirdly enough, someone in the comments just said, Tyler's a scammer. I think some along these lines. Tyler's a scammer. He's pretending to have investment accounts that he doesn't have. These are HTMLs. And he got sued last year because of it. If I got sued last year, I got a real problem. I thought that was funny. Anyway, so one of those days, huh? One of those days, dude. One of those days, dude. You know, I try not to get too high in the highs. I try to not get too low in the lows, right? So this is something that actually my dad taught me. I had to be like 17, 16. Listen, when I was a bit of a younger kid, I had temperamental problems, okay? Okay, I was a little bit of a loose cannon, okay? And my dad, he realized that one of my problems that I was having was that I would get too high in the highs, I would get too low in the lows. So when Tyler Hill was happy, Tyler Hill was real happy. When Tyler Hill was mad, Tyler Hill was pissed. And so I spent so much time just going up and down and up and down. I lacked a lot of emotional stability, and it wasn't great. It wasn't great. Well, over the years, let's say that was the last 10 years. Over the last 10 years, I've really focused on maintaining more of a neutral pace, right? Don't get too high in the highs. Don't get too low in the lows. Just keep it smooth. Keep it neutral, because just like you can have a great day today, you can have a horrible day tomorrow. You might get the best news of your life on one call, put down that phone and pick up a call from someone and it's not good, right? And so with that logic, the reason I'm saying this is because although this feels so good, feels so good, one of those days where you're in such a good mood, you drive to the gas station with no music on. Although it's been such a great day. My personal portfolio, my public portfolio that I'm faking this, by the way, is now at an all-time high. About to cross $100,000 for the very first time. Although it feels good, I try not to let myself get too wrapped up in it. I try not to let myself get too wrapped up into it. Because, again, just like when the market is crashing and I talk you guys off the cliff and I say, listen, do not fall into the trap. While everyone else is scared right now, don't fall into that. Don't fall into the emotional trap that the market is setting for you right now. Don't go that far. Keep it neutral, because just like today sucks, market might be at all-time highs next week. And just like we are seeing this market right now at all-time highs, and damn does it feel good. Tomorrow, the next day, we could be down 10, 20, 30% from here. You never know what old Trumpy Jr., Trumpy Sr. is going to do in office. You never know, right? And so I need anyone who's watching this right now, who's experiencing a great moment. This feels damn good. I need you to center. I need you to center. I need you to find a base, find a center, dial it back a little bit, enjoy the moment, but keep those emotions in check. Because this is one of the most dangerous times to be a stock investor. When the market is extreme in either direction, there's danger. You see, these markets are designed in a way in which allows, call them lizard people, call them whatever you want, the people at the top to extract liquidity at the people at the bottom. That's me and you, by the way. People at the bottom. This market is designed to extract liquidity from us, extract capital from us, extract value from us. And it's very difficult for them to do that in the neutral moments, when the price is going just a little bit sideways. Not a ton is going on. There's not a ton of opportunity. Where they make their money is in the extreme moments, whether it's convincing retail investors to sell at all-time lows. Go ahead and sell let me use a crypto example. Go ahead and sell this Bitcoin at 16,000, right? They get you. because they know that they can make money on their spread. So they'll buy it from you. When everyone's panic selling, they're buying all that those cheap assets from them at a big discount. And when they go up, they keep that spread, they make money, right? On the flip side, what they'll do is when this market is rallying and you're going into all-time highs and everything's parabolic and everyone's euphoric, they have a bunch of options. Option number one is they will convince users to buy from them. So just like they bought at the bottom, they'll start selling at the top and convince people like you and I to start buying stocks off of them at this crazy expensive price compared to what they bought it at. And that's how they make their spread. That's how they complete their spread, right? Now, in addition to that, they also make money on the leverage side. Understand this. In these moments, the danger isn't the market. The danger is you. Your mentality, your emotion, your mindset right now is the danger that you face on a day of an all-time high. Because you know the number one most dangerous emotion that you're feeling right now is confidence. So many of you who are watching this right now are seeing your accounts at all-time highs and going, I'm a genius. I knew it. And you get confident. And what confidence does is it leads you off a cliff. Because what happens is a lot of the times people will see their accounts at all-time highs and they'll go, I know what I'm doing. I got this. And they scale. They're willing to take more risk because they forget what the bad shit feels like in this market. They forget what 2 weeks ago felt like. That's a distant memory. And so in a moment like this, the danger is not the market. The danger is you. So yes, enjoy this moment, embrace this moment, accept it, feel it. It feels amazing. Again, I've never seen my public portfolio up at $100,000 in profit. And of course, this does factor in whenever I was younger trading stocks. I made like $18,000 back then. This was like 5 years ago. But I guess I'm faking this account, by the way, according to that one user. Although it feels great, center your shit. Get your shit together. And excuse my language, get your shit together. Because this is where the danger is. The strategy doesn't change. The system doesn't change. The principal approach doesn't change. Just like you didn't let emotions cause you to panic sell a few weeks ago, you're not going to let emotions cause you to panic buy right now. That feeling of FOMO you're feeling right now is not real. It doesn't actually exist. Get your shit together, okay? So I know I got you. I hit you with a little U-turn. We started off the stream real excited, real happy, real, word. And I still feel happy. I'm still excited. This is all-time highs for the public account. It feels great. Get your shit together. Okay. Now that we're centered, guys, we got a big day. Guys, we got a big day ahead. Because in just approximately 35 minutes, we are going to see AMD. Shout out to Jeremy. Learned a lot from him. Q2 earnings. And this is going to be a big one. Because remember, the market right now is running off the idea. It's running off this idea that the AI trade is back. That is what's happening. Do you remember? Let me ask you something. For those of you who've been in the chat, and there's many of you in here who've been here. I see a couple of you now, Xander, Treach, Melissa, etc. Do you remember last week when I said people think the AI trade is back and Monday will tell us if they believe it? Now, do you see what I mean? After the Microsoft earnings, after the Amazon earnings, people started to genuinely believe that the market is back. AI is back. Exponential compound growth from the AI trade itself is back. People started to believe it. But I told you all, next week will tell us if they truly mean it or not. And I told you, look, we're not out of the woods yet. And newsflash, for a lot of these stocks, we're still not out of the woods. But I told you, if the market truly believes it, if this isn't a flash in the pan, but the market truly believes it, next week we'll be up, and we'll be up good. And here we are. The market believes the narrative is back. The market is rewarding those who held. 1 week performance. Microsoft's up 26%, Google's up 13%, Amazon's up 20%, Micron's up 9%, AMD's up 15%, NVIDIA, second biggest company in the world, by the way. Maybe biggest. Wait, maybe biggest now, right? Yeah, biggest company in the world by a lot, actually. I'm a little bit late there. Up 7%. If we look at the one-day performance, financial, up. Industrials, up. Insurance, capital markets, up. Consumer cyclical outside of Amazon because it hit an all-time high and it's rotating, up. Everything is up. Everything is up. because the market believes that the AI trade is back. And today is going to help us know. Later today, we're going to get earnings from the second largest semiconductor in the world, AMD. They're behind NVIDIA, obviously. They produce GPUs, they produce CPUs. And the market stares when they post. When they release their earnings, the market stares because they are one of the most important links of this chain. Think about the way that this chain goes. We talked about it yesterday in the software earnings report from Palantir, but let's just talk about it again really quickly. Start at the very front. Software. A company like Palantir. A company like Palantir takes AI and uses AI from a more software basis to provide value to its customers. So customers pay Palantir to run software and AI for them of some nature, or just for their software. Okay. That software company, Palantir, purchases computational power and rents it essentially from these data centers. And that, of course, generates revenue for your hyperscalers, Google, Amazon, Microsoft, etc. Meta, kind of. The hyperscalers then create income and they continue to build more data centers because they see this as being a very viable business model. They, when they build these data centers, need the hardware that goes in the data centers because the data center is basically a big old Walmart full of a bunch of computers. That's the easiest way to explain it. It's a lot more complicated than that. Now, this hardware that they need to build these data centers includes GPUs, CPUs, DRAM, NAND, HBM, all of these different components. AMD produces a lot of these components, especially GPUs and CPUs, right behind NVIDIA. And so they are one of the most crucial aspects. They are near the top or bottom, depending on how you're looking at the chain, of this food chain when it comes to the world of AI. The money flows up into the pockets of these semiconductors, and AMD is a clear representation of that, which is the reason why a little old gaming company can be 15th, 16th largest company, 17, 18, somewhere in there, largest company in the world. And it's not just because they're so big that they're important, but it's the one that everyone cares about. Because people look at NVIDIA and they go, it's a little boring, right? Like NVIDIA's $5 trillion. What's it going to do? Give me a 50% gain? That's not good anymore. But people look at AMD as the viable next option, the next NVIDIA. That's how people look at AMD, the one that's going to kill the giant, the one that's going to go from a market cap of, let's see, I know it's somewhere right here. Let's see, where are you? 850 billion to $1 trillion to $2 trillion to $3 trillion and become one of the very first semiconductors outside of NVIDIA to reach 2 trillion, 3 trillion. That's what people look at for AMD. It's the high-speed car of the AI trade right now that people are watching and people are betting on. And today is the day that they release their Q2 earnings. Now, I think this is going to be a stellar earnings. I think this is going to be a fantastic earnings. And someone said you went mute. Am I good? Let me know if I'm good. I think this is going to be a stellar earnings because just think about what everyone has said recently. Think about what Microsoft said. Think about what Amazon said. Think about what Palantir said. These are in some way the customers of theirs. Obviously, Microsoft is just in general, but when you have software companies saying things are growing at a rate that we've never seen before, then you step that up, and then the hardware companies, the people who are at least creating the data centers for the software to run on, they're saying we're seeing things grow at a rate we've never seen before. It would be shocking for the next lineup to say, things aren't going as good as we figured. It really wouldn't make sense. And I think the market knows this. And I think that's the reason as to why the market is running right now, because the market knows something stellar is inbound. Now, is that a little spooky? Yes. Is the fact that AMD is pumping 8% leading into their earnings today spooky? Yes. Is the fact that Micron is pumping 7% today ahead of AMD's earnings spooky? Yes. It's very, very spooky. Because the market is pricing in a phenomenal report. And the problem with that, the problem with the market pricing in a phenomenal report is that nothing is good enough. So it's like, even if AMD does release the exact report that the market wants it to release, the price could still crash. I'm not saying it's going to, because there's real euphoria in the market right now. And euphoria is one of the catalysts people underestimate the most. There's real euphoria in the market. But it could. And so going into this earnings report today, going into AMD's earnings report today, I feel very glad. I feel very happy. It's good to see that the AI trade is still accelerating. It's good to see these stocks running. It's good to see the market feeling good. Look at this, man. Look what's happening here. Let me see something real quick. Look what's happening here. DC Fan Forever up $266,000 in his portfolio. Our guy Jan back at a profit now, back in the positive, smashing it. Alex raking in the gains. I mean, look at these gains, dude. Look at these gains. This feels good to see. I love to see this. My boy Gandalf up $1,000. It feels good to see the market up. It feels good to see growth. It feels good to see things going up, but I'm not blind. I'm not blind to the fact that the market also knows it. The market's also aware that some sort of great earnings report is about to release, most likely. The real question is what happens? And that's something I don't know. A lot of people have messaged me, Tyler, do you think AMD is going to keep pumping after its earnings? Guys, I have no idea. I have no idea. I would hope. I would love to see AMD release a great earnings and shock the market and come up towards this Fibonacci golden zone and smash through it. I mean, it's there. I'd love to see it break through that golden zone. I'd love to see AMD chase down 545, break through it, chase down 584, break through it, chase down 637. I'd love to see that. As a stock investor in general, I don't hold any AMD in my public portfolios, but I'd still love to see it because I know many of you do. So yeah, I hope, but it's just hope. I don't know what's going to happen. This market is very irrational. And remember, the market does not move off fact. It moves off response to fact. What I mean by that is the market doesn't respond to what their earnings says. The market responds to how the market feels about what their earnings says. They can release a horrible earnings report, but if the market for some reason absorbs that the right way, AMD will pump. They could release the best possible earnings report and still crash. Look what happened with Apple. Look what happened with Apple. Apple released a stellar earnings report and crashed, and it's basically only gone down since. Apple fell 13%. In a similar time frame, Meta released an actual turd of an earnings report in which they missed on earnings, yet from bottom to top, they're now back up 13%. So what I need you to understand is that there's no way for us to know. There's zero chance that you know what AMD will do after this earnings report. There's no chance that you'll guess it. There's no point in trying. So I'm not going to sit here and try to guess. But what I will tell you is what we need to be on the lookout for, what we're going to be on the search of through their earnings report. And when the earnings report releases, we'll compare. Okay, this is what we were looking for. This is what we got. And I'll give you my hypothesis of what I think that means for AMD moving forward. What do I think that means for the AI trade moving forward? And then use that to make decisions for what I'm going to do next in my portfolio, whether it's the individual portfolio or the hyperscaler portfolio. Now, I did get a message from one of you and you said, Tyler, why is your hyperscaler portfolio only at $5,400? It's because it was supposed to be $10,000. I had $5,500 worth of cash that I wanted to deploy still, but I never got the opportunity because the hyperscalers just exploded. I don't feel comfortable buying in my hyperscalers right now when everyone's so euphoric about them. So I invested $4,500 into the hyperscaler position. It's now up $955. I'm just going to leave it there for now. But again, to go back to the point, what I'm going to do is absorb today's data, absorb today's earnings report from AMD, determine what I think that means for the market moving forward. What do I think that means for the AI trade, semiconductors, software, etc. And then use that to make decisions on my portfolio. Maybe I add some stock. Maybe I sell some stocks. Maybe I go to liquid and open up some trades. Maybe I start shorting. Maybe I start longing. I don't know. I'll figure that out after the time comes. All we can do now is control what we can control. And you know what you can't control? You can't control what this earnings report says, and you can't control what AMD's price does after, so stop trying. Let's just prepare for the whole thing. So when it comes to AMD's earnings report, okay? When it comes to AMD's earnings report, and sorry I'm skipping through, this is my presentation from this morning in the video I posted this morning. When it comes to AMD's earnings report, analysts are expecting $1.61 of EPS, revenue to be at $11.3 billion, which is a 47% increase, data center revenue to climb up to $6.5 billion, and their gross margin to climb to 54%. Now, I want to see something real quick. What is that growth for data centers? Let's see what that data center growth is. Data center growth in 2026, previous quarter would have been 3 billion. So it's looking for a big jump. A big jump. No. I was about to say that doesn't even make sense. 4 billion. Okay, got it. 4.1 billion. About to say that number doesn't add up. We're not looking for 100% growth here. 4 billion up to 6.5 billion on data center revenue. Gross margin at 54%. Okay. That's what the market is expecting. Now, let me be honest with you about something. Although the market may be expecting these numbers, these are not the numbers the market wants. If we're going to continue to see this thing move in a parabolic fashion and continue to see upwards, you're going to need to see these numbers get beat by a lot. I'm talking in a revenue of nearly 12 billion. I'm talking EPS of $1.70 plus. Data center revenue 7 billion plus. Gross margin anything over 54% is fine. The market's going to want to see these numbers get blown out the water. Not just come in at expectations, because remember what we're dealing with here. We are talking about a company who is being priced for perfection. I mean, go look at their PE ratio. We're seeing this thing trading at a 171. 2027 forward looking 38, still high. We're talking about a company that's being priced to perfection. So the market isn't going to want to see 161. And God forbid it comes in below these numbers. God forbid they release 11.1 billion or $1.59 or any of that. That just won't be good. You can just bet it's going down. The market's going to want to see these get blown out. The market's going to want to see these numbers get blown out. All right. It's going to be very important. That's going to be very, very important to watch. Now, there are individual metrics that we also want to pay attention to too. As I mentioned before, data center revenue is very important. How much money are they actually generating from the hyperscalers? Because the hyperscalers sparked up this whole narrative that things are amazing and that they're growing and that they're scaling and it can only get better from here. Okay, we want to see that actually converted into revenue on the other side of that equation for the semiconductors. We also want to see what they say in terms of MI350 and MI450. These are their newer chips. Go on that in a second. Gross margin, you guys know gross margin is very important to me. I am honestly someone who will not invest in a company based on their margins. Just because I believe that margins can cap you or open up your ceiling limitlessly for growth, which I'll talk about in a second. And then their guidance. So outside of the basic earnings report, these numbers, we also want to dive into these four specifics, starting off with data center revenue. Wall Street is expecting server CPUs to be at 4 billion and AI accelerators, their Instinct program, to be at 2.5 billion. This is GPUs and CPUs, right? I don't need to explain too much why this is important because I already explained it. But remember, data center revenue for a company like AMD is important, yes, but it's more important for the whole AI trade. How much are hyperscalers actually turning into real revenue, pure revenue? Especially as, AMD's coming out and announcing Microsoft Azure and all of these things that they're going to be a part of. You need to see it translating into actual data center revenue. The next thing is MI350, and I talked about this morning. So last quarter, AMD said that MI350 entered into its volume ramp, and MI350 is one of their kind of previous versions of their chips. They said that MI350 going into the last half of this year was going to really start to ramp up in volume and that it was going to create real revenue for them. So tonight, they just prove it. MI350 is a big part of the reason as to why AMD has held up so well. Many investors have looked at their MI350 chip and heard what they said about the end of this year and said, well, if that does happen, then AMD should continue to generate more revenue and climb. So it stayed flat while a lot of stocks were falling. Now we need the proof. We're going to look at MI350 sales. Then we're going to dive into margins. Again, you got to pay attention to margins. If you are a stock investor and you don't pay attention to margins, you're not getting the whole story. You're not getting the whole story. I feel like too much recently I've seen analysts and YouTubers ignoring margins. They'll say, oh my God, look at the revenue climbing. But margin is outpacing. Their margins will fall by 10%. Their revenue will grow by 8%. And they'll say, oh my God, wow, they grew by 8%. I'm like, they lost money because their margins are getting worse, right? So you need to pay attention to margins. And when it comes to their margins, we are looking for a gross margin of around 54% from AMD. That would be what makes the market happy, okay? And last but not least, guidance. We are in a market that is pricing for growth, pricing for future acceleration, compound growth from here. The stock market is betting that this AI trade is about to pick up even more steam than it did previously. So what AMD says about the second half of the year is really going to give us a clear insight of if that's reasonable or not. And don't forget that in the last earnings report, AMD built their whole thesis of the whole year around the second half of the year. They said, yeah, the first half of 2026 will be okay. We'll gain traction. The second half is where we will really start to run and really start to shine. Well, guess what? This next guidance that we get gives us insight into the second half of the year, the beginning portion of the next half of the year. And we'll see if these promises that they made early in the year are actually going to come to fruition. Are they going to prove it? Not only for numbers, but also for things like Helios. Remember, Helios is that new rack scale AI system, the MI450 GPUs, class GPUs. They announced them in 2025. They went into rollout in, I think it was July 20th or July 21st of like a few weeks ago. Okay. We want to see quantifiable Helios orders. Are they actually turning over and selling these new GPUs, or expected to sell them at least in the next half? If so, great. That means it is ramping up. If not, that means that demand that they promised investors isn't truly there. And a lot of this stable momentum that they've had since May could actually have been worth nothing. And maybe AMD should have pulled back just like Micron did. That's what today's earnings report tells us. And that's why it's so important, because it's not, again, just for AMD, it's for all of them. It's for all of them. All of this momentum that has been built from the market or in the market by what happened with Amazon, what happened with Microsoft, can be erased depending on what AMD says. And, a lot of people say, Tyler, they only make up a small percentage of the semiconductor market. Like, why is it so important? It just is. I can't even really tell you exactly why. It just is. It just is. People care a lot. And it has a big impact. And again, people are betting on AMD to be, quote unquote, the next NVIDIA. And if AMD can't pull it off, no one can. That's the way the market sees it. So this is going to be a massive one, man. This is going to be a massive one. And I don't know if you guys are ready, but I am. And I'm pumped. I'm pumped. So that's what we're going to be looking for today. Just to recap, okay? Just to recap. We're looking for $1.61 or higher in EPS. I'm personally looking for $1.68 higher. Revenue, $11.3 billion is what Wall Street is expecting. I'm looking for at least 11.7, 11.8. Ideally 12 or higher. Data center revenue, analysts expect $6.5 billion. I'm looking for 6.89 or 7. Somewhere in there, at least a 8 to 10% beat there. And a 54% gross margin. Anything higher than 54% will make me happy. Those are the numbers we're looking for. In addition to that, we're looking again, $6.5 billion on data center revenue. Are they actually selling their MI350 chips that they promised would be in a volume ramp by now? Are their margins staying consistent? And are they starting to look forward into Q3 and Q4 of this year and still seeing the same trajectory that they did earlier this year? Those are the things we're looking for from AMD's earnings reports today. That's what we're looking for. And then after they announce this, we'll dive through it. We'll compare it. We'll see how it goes. We'll dive in and we will listen to their earnings call. That's going to be at 4 p.m. That is in approximately an hour and 15 minutes, 4 p.m. my time, 5 p.m. Eastern. So that's the game plan for today. But in the meantime, now that you guys are ready, now that you guys are set for their earnings report, what I want you to do, if you feel ready for their earnings report, you have a decent idea of what it is that we're looking for, the numbers that we're looking for, and you know why AMD is so important. I have 2 things I want you to do. Like the live stream, if you appreciate the rundown, and put a 1. Just put a 1 in the chat, just so that I know you guys are ready. I just want to know, okay? So with that in mind, let's go ahead and let's do a bit of analysis. Okay, let's do a bit of analysis. So when it comes to AMD, although it has made fantastic progress, I've told you guys several times, AMD is not back yet. Because AMD had 2 things that it needed to accomplish. First, there was a massive zone of resistance right here around 501. Said it needs a break above that. If it does that, it then needs to come up to this golden zone right here and break it. Breaking through this golden zone, which tops out at $545, gives AMD the best possible opportunity to go to an all-time high. And realistically, you shouldn't be even thinking about all-time highs for AMD until it breaks the golden zone, 545. Because the golden zone is too strong, guys. It's just too strong. Look what happened the last time we ran up to it right here. Look what happened. We put in the high. We came down. We started to reverse into the golden zone. And it pushed to the top of the golden zone. But ultimately, it ended up crashing. And we ended up seeing Amazon's price fall from, I said Amazon, I think, AMD's price fall from $550 all the way down to $427, $137 correction for AMD here. The golden zone is very strong. And now that there is a new golden zone, which was created by the new lower low, you got to pay attention to it. It tops at 545. Does AMD break above 545 or not? If it does, the door is open. It doesn't mean that it definitely will go up to these higher levels, but there is a very real world in which AMD pushes up towards, one, its all-time high around 584, but secondly, its next all-time high around 638. Then the next one could be around $713. There is potential upside here for AMD of 11%, 21%, or even as high as 35%, which would put AMD at roughly 251 trillion, somewhere up here with Samsung and Micron. I could see it. I could see it. I don't see a reason as to why not. I don't see a reason as to why AMD shouldn't be a $1 trillion company. Not if these are. Not if Micron is. Not if Samsung is, and that's a little bit different. Not if Tesla still is. SpaceX, Broadcom, that's different. But, these ones, I see no reason as to why we can't be looking at an AMD that should maybe reasonably be priced somewhere closer to $600, $700. I can see that. I can see that. But none of that happens. There's no point even thinking about it until AMD breaks above the golden zone. It must break the golden zone. Now, the next question that a lot of people are going to have is, can it? And yeah, I'll say it can. If we look at the HCI, this is the Hill Conviction Index, and we're going to specifically look at this meter right here. Oh, by the way, when some of you purchase the toolkit, you're going to notice that the meter isn't on the screen. Just go to the right a little bit. It's over here. That's happened like 20 times today. So it's over here. Just go to the right. But if we look at the HCI meter, what you can see is that AMD's HCI is now back at a minus 0.87, which means that even though it has made a beautiful move upwards, it still hasn't even remotely overextended. This is just getting out of recovery territory. This is just starting to break out. And what that means is that if you look at how this has played out before in history, AMD easily could push into the +1, +2, or +3, which puts Amazon at an all-time. I keep saying Amazon. Oh my goodness. AMD. I was real pumped about the Amazon earnings last week. But it puts AMD towards an all-time high. 560, 570, 584. I could see it up there. It has the room. And as you can see, on the daily chart at least, there isn't another seller zone except for that golden zone between us and 561. So yes, AMD absolutely has the ability to push to a new all-time high. AMD absolutely has the room to push to an all-time high. For sure. Don't even get me started about the weekly. Don't even get me started about the weekly. Look at this. Your weekly's back at plus 0.55. This thing's not even at +1 yet, and it's still elevated off that run to the upside. Man, look what happened last time. Boom, nice run up. Pulled back after, but very similar moment, just like this, when you got that push towards that all-time high. So yes, AMD absolutely can push to the all-time high. Will it? I don't know. I don't know, guys. I don't know. But it does have some fantastic signals and some fantastic signs flashing right now. And for any of you who was purchasing AMD around 440, 435, anywhere in here, because you saw that this HCI, the toolkit, was green. We were at look right here, 3.73 and 3.5. Any of you who are purchasing because the toolkit was in the green, congratulations. Congratulations. I'm glad that it's working. AMD came into the green zone, got a bounce. Came into the green zone, got a bounce. So anybody who's been making moves when AMD is overextended to the top side or the bottom side, you're making real money. Congratulations to all of you in here. You're making real money. Congratulations. And look, if you don't have the toolkit, don't forget, it's available down below. It's available down below. The toolkit works very simply. It gives you these red lines. This tells you where the sellers are. This is where the sellers will step in. It gives you the green lines. This is where the buyers are. This is where you can expect the buyers to try to step in. And it gives you this meter, the HCI. When this meter goes up, it means the price is getting too high. So you see how it's turning red in these moments before it pulled back? When the meter goes up, it means that the price is getting too high. When the meter goes down into the green, it means that the price is getting too low. So what some people have done recently is they went in and were accumulating in the green zone, and now they're up. I mean, your AMD position is up 20+%. Congratulations. If you don't have the toolkit, again, the link's down below. But with that in mind, we have 8 minutes, roughly, until AMD's earnings report drops. And it's going to probably come out a little bit after 3 o'clock, but still, man, it's going to be a crazy one, dude. On a side note, this thing right here, Palantir is going bananas. It is going absolutely bananas. And it's about to make a very important decision. You remember I told you guys, whenever Palantir was down here, I said, look, if you want to know that Palantir is actually back and possibly about to go towards an all-time high, I told you there's 3 things that need to happen. I said the first thing that needs to happen is it needs to break above this golden zone right here. Right here. Is there a discount for the toolkit? Yes, code toolkit. If you use code toolkit, I'll put it in the chat. You get a 10% discount. I'm ending that on Wednesday, tomorrow. So if you want the toolkit for a 10% discount, you have until tomorrow. I don't know what time yet because I'm going to be a bit busy. So check it out. But first and foremost, Palantir needed to break above the golden zone. I said that's number 1. Number 2, it needs to come up and break through this descending level of resistance. I said if it manages to do number 1 and number 2, the very last thing Palantir needs to do is break above the previous high at 164. I said if it breaks above $164, realistically, yeah, you could start saying that Palantir is probably back, that this downtrend could be coming to an end, and that Palantir may be looking for a move up towards $180 to $214, somewhere up in here in this extension zone. It might not go straight up to it, right? Like it might look something like this, but yeah, I could see Palantir pushing back up to 180. It's almost done it. And all Palantir needs to do now, is break through 164. Palantir needs to break through 164 and it opens up the door for a move to 180 to 214. That is insane. And the fact that it's done this in one day is insane. I don't know how long I said, but I thought it was going to take like a week or 2 for this to play out, right? Like maybe you do this and then a little bit of that, then a little bit of this, right? And a little bit of that, and like, ooh, then a bit of this, and then, no. Palantir said, hold my beer, dude. And just went straight vertical here. Absolutely insane. A+ price movement. Very good. Congratulations, anyone who got on a Palantir. I don't hold any Palantir. I used to back in 2024, funnily enough. Sold it. Sold it at a gain that I was happy with at the time, but in hindsight, I'm not super happy with now. Sold it around $45. Yeah. But who cares? A gain is a gain. But anyway, Palantir absolutely smashed it. Let's look at a Micron real quick. We have approximately 6 minutes until the market closes, and then the earnings report will drop at any given moment. Micron is almost back as well, but I've made it very clear to you all. Micron must be able to break this descending structure. You see this sloping channel? Micron needs to be able to break through this. While Micron is stuck in this, it's too dangerous. At any given point, Micron could crash. What if there's a world in which Micron is rallying right now up into AMD's earnings because the market's rallying? AMD releases their earnings. It's a buy the rumor, sell the news event, and then Micron crashes all the way back to 700. Are you mentally prepared for that? Because although I don't think that's going to happen, it's possible. Because while Micron is under this red zone of resistance, there at any given moment can be a pullback. It needs to get out of this structure, and that looks like Micron breaking above $929 right now. Micron needs to get, let's call it 930. Micron needs to get back to above 930. There's still $35 from now. So no, Micron is not back yet, and you shouldn't treat it like it is. It still needs to break the structure before we can get excited. Trust me on this. It needs to break the structure before you can get excited. I would not be buying Micron at the top side of the structure. I'd rather buy Micron $40 higher than buying it right now. SanDisk. I'm not going to say I told you so because it hasn't happened yet. Or has it? Oh, it has. Yeah. I'm going to kind of say I told you so. Okay. I'm going to be honest. When SanDisk came down to $1,000, I opened up a long trade on it. And I said, I think SanDisk at some point is coming back up to this trend line. It could be now or it might take a little bit, but I think SanDisk is going to try to go back up to that trend line. And it has. There is a piece of me that regrets closing down my swing trade as early as I did. I closed down the swing trade for a 42% gain. I was just happy with it. But I exited at $1,200. And in hindsight, I go, ooh. I ain't gonna lie, guys. In hindsight, I do go, ooh, I missed out on 50% more gains. Like a 100% gain, basically. I have a little regret there of closing it, but listen, profit is profit. Who'd have thought the market was going to do this? Who'd have thought? Who would have thought, right? But it is back at the trend. It's back at the trend. And if it breaks that trend, guess what? You're probably looking at a SanDisk coming back up towards $1,700. I know that seems far. It's not. And that is just normally what happens. You create the downtrend. You break through it, or you break the structure at least. then you reapproach the trend. You're going to try to change the trend from being in a downtrend to now in an uptrend. And that requires it breaking above $1,700. So yeah, I think if SanDisk breaks this trend line, it's coming for 1,700. The question is, does it? So just like Micron is at the bottom side, or the top side, sorry, of this structure, SanDisk is in a very similar way. In a very, very similar way. SK Hynix, not going to get into that one right now. We only got 3 minutes until the market closes. SpaceX, etc. SoFi, dude. Jeez. SoFi is getting close to my short hedge zone where I open up short trades on SoFi as a hedge against my long-term portfolio. It is almost there. That's $19.05 or higher. That SoFi purchase that we did at $15.20, I believe. Yeah. $15.20 is aging like wine. I almost said like milk, but I think that means the other thing. But it's aging like wine. That $1,000 purchase that we did on SoFi at $15.20 is now up 24%. And the craziest part about it is that I based it on the fact that it was back at a buyer zone and based on the fact that its HCI was at the time at a minus 3.84, which is my buy trigger. The toolkit, the purchase that I did because of the toolkit is now up $240, which would pay for the toolkit itself over and over and over again. That's so cool, dude. The toolkit that caused this purchase has now produced me $200+ in gains, which could pay for multiple toolkits. That's so badass. That's so cool. You guys got to check it out. The link's down below. Go check it out, man. Insane. But we are now 1 minute away. I don't know exactly what time AMD usually reports. I don't know if it's like right after or what. So let me look into it. And yeah. Let's see. AMD earnings inbound. If they miss, I need to rethink my entire life. All right. AMD earnings about to release. All right. Things are getting juicy, folks. People are selling off. Let's see what happens. My stop loss activated. Jeez, that was a tight stop loss, dude. All right, the numbers that we are looking for. Again, 1.61 EPS, 11.3 billion revenue, 6.5 billion data rev, 54% gross margins. I used to wait for the SEC website to load. It takes so long to load that I just scroll Twitter now. And I just wait for it to update and I just look at Twitter in the meantime. What a day. Keep an eye on it for me, will you guys? Just looking at the chart here. Down 2% from that high. Nothing crazy, though. If you're freaking out about this pullback that AMD is doing, please relax a bit. We are. This thing is still up a lot on the day. Real quick, folks, while we are waiting on this AMD earnings release, do me a quick favor. Please, this really helps the channel out. Please just drop a like on this live stream. If you've enjoyed all of the preparation work, all the technical analysis, the thoughts, the insights, all that, just like it. That's all I ask. Just drop a quick like. It sends it out to more people. More people come in. It's great for the channel. I just ask. That's all I ask. Just one quick little like, okay? Let's see. Nothing quite yet. Nothing quite yet. Seeing a bit of stability here. Let's go down to the lower time frames. No, let's go to the 1 minute. There we go. Bearish engulfing candle, bit of bearish sentiment in the price right now. You're seeing some people selling off. This is classic just momentum buying, right? This is classic just momentum buying. Is the toolkit a reoccurring fee? Nope, the toolkit is a one-time purchase. You buy it once, you have it for the rest of your life. People bought in on the momentum here, right? They rode the momentum up and now they're taking profits. And people are scared. People are so scared right now. I don't know what happened. Oh, goodness. What happened? I broke it. All right, there we go. People are so scared right now. They're so worried about whatever AMD is about to say. Because a lot of people know, right? AMD's priced for perfection. So even if they release a smashing earnings report, it could still pull back. If it does great, it could pump. You never know here. So let's see. Let's see. It should be out. It's what 303. It should be out by now. No, nothing yet. Pinsy said it is out. Nothing yet. Again, if you're just joining in, we are looking for AMD to release $1.61 EPS, 11.3 billion revenue, which is a 47% growth, 6.5 billion data center revenue, 54% gross margin. I'm personally looking for anything over 1.68 for EPS, anything over 11.7 to 11.8 for revenue, and data center revenue to be as close to 7 billion as humanly possible. That's what we're looking for. Where do I get the toolkit? It is linked in the description down below. Why is this so zoomed in? Yuck. Or zoomed out. Is there any issues with liquid to use? Nope. Nope. There is not. What the hell is that, bro? Any minute now, folks. Can Toolkit be used with Thinkorswim platform? The Toolkit is a TradingView plugin for now. This is a great post. AMD has already doubled this year and is up 8% before earnings. At this point, somebody hold on. I just thought about this. I saw it earlier. Aladdin, my bad, dude. You dropped a donation earlier and I didn't notice it. That is on me. Totally appreciated. All of Aladdin. Always love to see you in here. I cannot believe I ignored that. I saw it while I was talking. I meant to go back to it. I never went back to it. That is totally on me. Totally on me. Appreciate you, homie. AMD has already doubled this year and is up another 8% before earnings. At this point, a good quarter probably isn't enough. Everyone already expects great. That's the part newer investors learn the hard way. A company can crush earnings and the stock can still fall in the price if the price ran too far ahead of the business. I guess we'll see. I like AMD and I do think they will continue to go up to the right over time. I just don't love it as much at these prices. The best risk to reward was back in 2025 under 200. Yeah, agree. Let's see. Do 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 do. Oh, that's a bounce that makes me think that earnings released. Let's see. That sort of bounce looks like the numbers released, but let's see. Nope. Isn't X so nice? Isn't it nice to just be able to refresh this? Like, you don't have to pull the reports. The report will post like 5 minutes after they're released, but we can just use this. It's so much better. The bearish perspective here from this fella, DJ Muggs. The stock rallied 16% in 4 sessions into the print. The washed out setup is gone, and the minus 17% reaction from 2 quarters ago shows what a light DC GPU guy does. Below 487, the whole recovery unwinds towards 455. What swings this is right now, dude. There are 1,000 of you. This is the biggest live stream we've ever done before. By the way, this is the most people we've ever had before. I'm going to get a little bit weird if I talk about it too long. Thanks. All right. Anyway, what we got here, price movement is insane, dude. AMD leak earnings. Nothing yet. Nothing yet. Yo, this is so irritating. Jesus Christ. Sorry, bro, but you got to go. My word. Okay. All right. Let's see. By the way, if you are new to the channel, while we are waiting for AMD to drop their earnings, feel free to go ahead and hit a little subscribe, folks. Hit a little subscribe. I try to post one video every day and one live stream every day of the week. That is so cool to see. 1,000 watching. Not going to go into a long, sappy moment about how much I appreciate you guys because we're worried about AMD's earnings, and it should be dropping any second now. So not going to get into it, but thank you guys for being here, man. Thank you all for being here. Feels good. Earnings release at 4:15 EST. So earnings could be in about 7 minutes or so. This price movement is actually wild, though. Did SpaceX release their earnings? Oh, there you go. SpaceX Q2 earnings, revenue, $7.81 billion, 92% year over year. I want to see that against their estimates because I don't know the estimates because I don't care about SpaceX. Okay, here we go. Okay, SpaceX comes in 92% year over year beat, 6.8 to 6.9 billion was consensus. That's great. Adjusted EBITDA at 350, EPS at a minus 0.9. That's actually good. They're moving closer and closer to being positive EPS. Operating loss at 143 million. Starlink connectivity 4.9. Starlink is such a damn good business, bro. Starlink is such a good business. I just wish I could buy that and none of the other stuff. Wow. Dude, this is ridiculous price action, though, from AMD. Every minute that goes by, you can tell people are freaking out, like absolutely freaking out. They're so nervous. And that's why you keep getting these euphoric moments. People are like, okay, we're selling. All right, we're selling. Okay, we're buying. Okay, we're buying. All right, now we're selling again. Oh, no, we're buying. Now we're selling. Like, dude, people are they're off the walls right now, bro. This is a wild moment, man. Because just who knows what they're going to say, you know? Isn't it crazy to know? You know how funny it is to look at my own portfolio and see it up like, what, 9 something today, roughly? Yeah, my port's up almost $9,000 today, and I know it can all be wiped away based on what they say. It's so funny to think about. It's so funny to think about that. For anyone who is new into the live stream, don't forget, these are the numbers we're looking for. AMD should be releasing in approximately 5 minutes. Let me... AMD. God dang. AMD earnings in 4 minutes. There we go. Like all of our games in the last, yeah, like legitimately all the games that have been created could be wiped. I'm up, what, 18? Yeah, $18,000 in the last week in the public portfolio. It could be wiped. It can actually be wiped over the next 2 days because of whatever they're about to say. Oh, goodness. Let's see. It's going to be a good one. I'm pumped. Super pumped. Appreciate you all for dropping the likes on the stream while we're waiting. That is super, super, super appreciated. We are at 300 likes, so there's 1,000 of you in here. That is a huge ratio. Thank you guys so much. I think that's the most likes we've ever gotten on a stream before. It's pretty badass, dude. I only started this channel 4 months ago. Ain't that crazy? I feel like I've known y'all longer than 4 months. Man. I don't care. I was afraid and sold half my position. Oh, snap. Nice little break back there. You're getting overlapping price action, which usually isn't a good sign. I'm just going to be honest with you, folks. I'm just going to be honest. Overlapping price action usually isn't a great sign when you're in a bullish period. Whenever the price is moving up, it's usually not a great sign. But look, there's exceptions. There's exceptions. Keep an eye on it. Two minutes out. I think it should be about 15 minutes. Yeah, real talk. You still got room here, man. You still got room here on the 5-minute charts. Like although it did pull back pretty quickly, it reset quick. You still got room to run here on the lower time frames. Even if you go all the way out to the, even if you come out to the 15 minutes, dude, you're still sitting at net neutral on a. I mean, you got a bit of a spinning top there, so that's a little bit more concerning. But even on the 15-minute chart, dude, you're opening up and you're seeing this good correction. You see like these little moments you dip into the black zone, the neutral zone. Boom, you see the push. Still could happen here, man. Still can happen here. Can you tell my Gizmo to go? Yeah, Wayne Jones kids, go sleep. AMD is one of the. Oh, almost got me for a second. I thought that said AMD. Then I saw revenue at 392 billion, and I actually almost had a heart attack. I actually almost had a heart attack just now. Let's see. No, you. If you're waiting on this earnings report, remember the numbers we're looking for: $1.61 EPS, 11.3 billion revenue, 6.5 billion data center revenue, 54% gross margin. I will be pulling the full report in a second. Once it just loads, it takes forever to load sometimes. So I'm just looking through Twitter. Twitter will give it to you straight. Okay. Should be coming out literally any second here. Like any second, dude. Imagine being the person who releases it. You just got the world on you. Ooh. How did they get this so fast? Okay. It's decent. It's decent. It's a beat. It's a beat. It's decent. I'm not going to lie. It's not amazing, but it is a beat for sure. Listen, it's an amazing earnings report. Yeah. 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 Right. 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 Okay. Okay. Right. Okay. 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 It's not impacting the wider market yet. It's just not good enough. It's the problem. That's actually pretty decent. It's just not good enough. Look, the reason why it's selling off right now It was a great listen. Okay, let's have a moment here. This is a good earnings report. For the company of AMD as a whole, it's a great earnings report. They beat expectations, they're growing, they're scaling. The AI trade has very high expectations on companies like AMD. And I told you, I said, look, I know that the market, estimates are saying 1.61. I was like, I told you, you're going to want to see $1.70. You're going to want to see 12 billion, 11.8, 11.9, 12 billion. You're going to want to see data center revenue at 7 billion. You're going to want to see these really elevated. And although they did do a great job, it's just not good enough. It's not good enough, right? Revenue came in at 11.5, estimates 11.3. The market probably wanted 12. EPS was $1.66. I think the market wanted somewhere close to $1.70. Data center revenues at 6.7. The market wanted 7 billion. Gross margin 56% is what we got. 54%. Their numbers are off. Its gross margin actually was pretty good. 56% on gross margin is actually pretty damn good. That's surprising, and I'm happy about that. That's actually great. It's just not good enough. It's not good enough, and the market's not going to be very excited about that, which is the reason why you just nuked like that. Let me change the title real quick. There we go. It's not bad. It's not bad. It's just one of those situations to where it's just not good enough. And what makes it worse is that Microsoft and Azure, Amazon and AWS, and Palantir back to back blew it out of the water, beating expectations by several percentage points, right? It set the market up to go, oh my God, everything is growing at a rate that no one saw coming. This from AMD makes the market go, oh, that's about what we figured, but that's not as exciting as we thought. And listen, that's a ridiculous mindset. That's a ridiculous mindset that the market has. Don't get me wrong, but it's just what we're in. And again, this is why I told you all prior to this earnings report, I was like, dude, although this is what now imagine if this is what we would have got. Imagine had they not beat at all. That would be much, much more problematic. I am glad that they beat. It wasn't a big enough beat to make the market excited. Gross margin was sick, though. 56% is sick. Dude, you're not sitting. Companies didn't used to be at 56, 55% gross margins. Not like that. That's not normal. That's great, but it's just not good enough. It's simply just not good enough. I mean, these are fantastic numbers, dude. Look at Walter, always coming in with the dubs. Yeah, it's just not good enough. The market was pricing in something absurd, and it didn't get that. It got a great earnings report. It didn't get something absurd. 56% there, though. Yeah. Yep, and that's what you get. I mean, this is what we get, right? This is the sort of move that you'll get. Now, one thing that I am curious about, not bad though. You're getting a bit of a rejection. You know what? How are hyperscalers holding? Wow. Getting actually a bounce from the hyperscalers. You know what people are doing right now? They're going like, oh, well, if the semis aren't the place to be, the hyperscalers, they're growing like crazy. So the hyperscalers are the place to be. And you are actually seeing a bounce right now from some of these, right? You're seeing a Microsoft give you a little bounce. You've even seen a little Google bounce here. Yeah, you're seeing a Google bounce happening right now. People are rotating. They're rotating. They just sold AMD and bought everything else. Especially in the hyperscaler world. Good to see Micron holding up. NVIDIA, right? NVIDIA's pulling back a little bit. Nothing super dramatic. It seems like this is isolated to AMD right now, which is weird. That's a little unusual. I will say I am pleasantly surprised about this. The fact that AMD itself was the only one who took a bit of a dump here, but a 13% fall off of that is not particularly surprising. It's not really that bad. It's really not that bad when you look at the general trajectory that this thing has been on today, especially over the last few days. Whew. Yep. All right. Let's see if I can get this actually pulled up. Let me see if I can get the actual earnings report pulled up now. Here we go. Okay. This is from Dr. Lisa Su, AMD's chair and CEO. We delivered an excellent quarter with record revenue and profitability as data center revenue more than doubled year over year. We enter the second half with strong momentum as EPYC demand accelerates. Revenue increased 50% year over year to a record $11.5 billion, which is insane, by the way, driven by continued strength in our data center business, which represented 58% of company revenue in the quarter. We expect data center sales to accelerate in the second half of 2026, driving stronger overall revenue growth and continued earnings expansion, which does make a lot of sense, right? Especially based on what Amazon said, especially based off what Microsoft said. Now, in terms of the actual numbers, let's look at the data. Let's look at the data, folks. 11.5 billion compared to 7.6 billion last year. 6.2 billion from 3 billion gross profit is a massive jump, especially considering, I mean, dude, look at the margin. Like, I know I keep harping on it. I'm sorry. I know it's a little annoying. Look at the margin. 40%. 40% gross margin in Q2 2025 jumps to 54%. Wait, pause. I thought it was 56%. Non-GAAP. I see. Okay, I see. You know what? Let's screw this. Let's just stick to this. 43% to 56% gross margin is nuts. Operating expenses obviously jumping up, but look at net income. $781 million to $2.7 billion year over year. EPS from 48 cents to $1.60. This is very good. This is very good for AMD. It's just not good enough for the sort of market that we're in. And it's not going to add fuel to the fire that there already was in AI. Over the last few days, there's been a real fuel in the fire because of what we saw from Amazon, because of what we saw from Microsoft, right? It's not going to add to that fuel, and people don't like that, right? People don't like that. And so naturally, you enter into a moment just like this. You enter into a moment just like this. Let's see. Let's look at some. Oh, here we go. So AMD, this is recent highlights, so this isn't really going to give us anything too much, but launched AMD rack scale solution, et cetera, et cetera. Anything on current outlook? No. Okay. Ryzen, Korea. Seeing if there's anything in here that we didn't know. Yeah, we knew this already. Yeah. I mean, look, quarter over quarter, smashing it. Quarter over quarter, smashing it. 13% quarter over quarter growth in revenue. Increase by 1 point in terms of margin, which is great, obviously. Operating income coming in up 22% quarter over quarter, which is good because it does mean that it is accelerating later into the year, which is what they were saying it would. Operating margin up 2 points, percentage points. Net income up 22%, which is big. Diluted EPS up 21%. It sucks, you know, it sucks that you're in a market that is a bit irrational and that is a bit overly emotional, because that is actually a really good earnings report. How does one get a working copy of your Tyler Hill index chart, please and thank you? Just go down to the link in the description, and it's the toolkit. It's the toolkit. It's like the first or second link in the description. Well, all right. Well, we got their call in 35 minutes. Let me just leave this up for now, just so that anyone who's joining in gets the update. Change that title real quick. I always got to change the title during your live stream. You know, one thing I am glad to see is that we are not currently. I'm glad to see that we are not currently seeing this having a widespread impact. I think it's obviously impacting AMD, but it is good to see that the market is moving past it. That actually does go to show that the market is still strong and somewhat stable right now. Because if you'd have put us back 2 months ago or earlier this year, if AMD would have come out and maybe quote unquote disappointed the market, you'd have seen Micron nuking. Micron probably right now would be all the way back to around 839 to 810. It would have been somewhere back down here. Nvidia maybe wouldn't have seen a big pullback, but it would have seen one bigger than that. You would have seen that same sort of effect, like your SanDisk would be pulling back, your SK Hynix would be pulling back, any sort of semiconductor company whatsoever would have been pulling back. And that's actually not what we're seeing. We're seeing it contained to AMD right now, which that's a good sign. That's actually a really good sign. It's obviously not great for AMD holders out there because, you needed to see AMD breaking that golden zone. And that's not what we've gotten. But I mean, I'm not going to go and say that, it's over yet by any means, by any stretch of the imagination. Still got some good support below us. It's definitely going to dampen the upside potential here. It's going to dampen that upside momentum that we've been building for the last 4 or 5 days. And it's not great. But you remember I told you guys, when everybody was talking about, hey, you got to buy AMD. Should I buy AMD? I told you, you can't look at an all-time high. Stop thinking about AMD going towards 586 or 641 until it breaks the golden zone. Because while it's in the golden zone, what did I tell you? At any given moment, AMD can see its price come down and get rejected off that golden zone, right? And this is why technical analysis can be so important. This is why it can be so useful. It gives you imagery and a perspective on these stocks and on the market that you wouldn't get if you were just looking at the price, right? And so although it is a bit unfortunate to see AMD pulling back because it's, the market's a bit disappointed, it is a good sign that this isn't having widespread impacts across the entire AI trade. And it goes to show that the AI trade is very strong. It goes to show it's very strong. And this could be a bit of a catalyst to continue to push things like Microsoft higher. If people look at it and they say, well, the money's obvious, the next leg here are the hyperscalers because they're the ones who are actually making the money from the software companies like Palantir, who's making money. Maybe there's a world in which you see this as the catalyst that starts pushing the hyperscalers more. Maybe this pullback that Amazon's seeing right now is just a temporary retest back towards liquidity before some sort of continuation upwards, right? Maybe you get a Google finally making its case and pushing up through its own golden zone. Maybe, I don't know. But I am glad today to be positioned in hyperscalers, that's for sure, because my bet is that hyperscalers are going to be the ones that produce more easy gains over the long term than the semis. So all in all, I mean, it's not a horrible negative. It's not a terrible impact across the market right now. That was a crazy moment, though, dude. I wish I could clip that somehow. Of when we saw it, I was like, this isn't a great report. We open up the chart and it's just nuking like 10% almost immediately. That's not great. It's not great. I will say though, Amazon. I keep saying Amazon. AMD is doing a very, very good job right now of actually maintaining support too. So what you can see is that AMD had these 2 major golden zones of support directly below it. There was one that ranged between $483 and $470. And AMD also had another one sitting below that, the more macro golden zone, between $461 and $443. And what you can see is that it didn't even come all the way down to the bottom one. It ended up just maintaining this first one right here. And it's actually using it to try to continue a bit upward. So AMD is showing a lot of resilience right now. I think this does go to show the strength of the AI trade. Again, the fact that we're not seeing the other ones really selling off too much and AMD is actually maintaining pretty well right now, I think is a great sign that people are not feeling too wavered by this report, but they're definitely feeling a bit nervous that this could dampen the upward potential and upward momentum that's been building in the market for the last little bit here. And I don't think this is going to update because the market is closed, which is so annoying, by the way. But yeah, so it definitely dampens things. It sucks, right? Like I feel like we've gotten used to seeing Amazon smash it, Microsoft smash it, Palantir smash it. Speaking of Palantir, one thing I am curious about. A little bit of a pullback here, but again, nothing super major. Palantir just came back up to this previous high right here, and it got rejected. They're all sitting directly below those massive resistance levels that I've been telling you guys to watch out for days at this point, right? So when you see a Palantir get rejected, it's not surprising. When you see a Micron get rejected, it's not surprising. There's no need to be surprised here. It's just what they do, right? They come up to these major zones of resistance, they get rejected, they come back down, they find support, they go again. But I do like the fact that AMD is showing a lot of strength here. The question is, how much power do the buyers have? Because this is a very, very, very irrational market. And when South Korea wakes up, they're not going to like even this. This alone might freak them out and to start selling random shit like SK Hynix, right? So the question is, do the buyers maintain? Are the buyers going to be capable and willing to maintain and keep holding and keep stepping in when they need to? Or are these sellers about to regain control? I guess that's the next question. That's the next thing that we're going to need to pay attention to. And it's going to be super important to see if AMD can maintain it. Because realistically, right, like AMD has actually done a good job of putting in higher highs and higher lows. AMD has been in a little micro uptrend since this pullback right here. So in theory, if AMD maintains this higher low, you could still see it try to push back up towards 540 or higher. It's just going to be much harder now because it lost a little bit of momentum, took the wind out of its sails. And tomorrow we have SanDisk, I believe. We have SanDisk tomorrow, I believe. Not nearly as big as AMD, but definitely important for semis. It does make me a bit nervous, but maybe people will go into SanDisk expectations with a little bit lowered expectations now and not expect it to come in beating this thing by, 10, 15, 20% or something along those lines. Any thoughts? Anybody adding some thoughts in here before let's see, 25 minutes until their call. It's so funny when you see so many people who are like, why is this happening? Why is this happening? It's like, yeah, dude, that's the AI trade for you, pal. That's the AI trade for you, pal. That is kind of what happens. Uh that that's not really it. That's not really it. That's not particularly what's going on. I do hate how X is just so much AI slop. Like somebody give an actual opinion. Yeah, man. Crazy work. Crazy work here. AMD holding up decently well, though. Holding up decently well. Let's see on the 5 minutes. Yeah, so starting to come down and retrace that wick a bit. What happened here? Minus 4.69 on the 5 minute HCI. 10 minutes, minus 4.72. 15 minutes, 409. 30 minutes, 2.76. Okay, not fully extended there. So I'd assume 45 is a bit higher in the pluses. And then on the daily, are we negative again? I mean, on the hourly, are we negative again? Not quite negative yet on the hourly. Still in the plus on the 2 hourly. And then on the 1 day, I would assume that we are now back towards, minus 1.08. So, yeah, came down, reapproached the same buyer zone at 452, 462. Plus 1 reading on the hourly HCI. So you got room. This definitely could try to continue a bit lower. It kind of comes down to this little micro golden zone in my read. Like if we see the golden zone fail to hold here, you're probably looking at an AMD coming down to like 437 to 414. I could see that happening. Those are going to be your breakdown levels. And that does, of course, reapproach this previous low as well. It sucks that it erases a lot of the gains. Basically, all of the gains since the AI trade popped back up last week. But I mean, it's holding up well right now, at least. So this is going to obviously be what we would need to pay attention to for the next hour or so while earnings report starts, or the earnings call starts in a little bit here. How y'all feeling, chat? Look at how those buyers stepping in though. Let's go on the 1 minute. You got your buyers stepping in. They are trying to show some strength here. They're not doing a great job right now, but they're definitely trying to hold the line for sure. When do we buy the AMD dip? That's a good question. Let's see. Where would I be looking to buy AMD? Get rid of everything. So let me start off with where I would want to buy AMD. I would want to buy AMD. I would be excited to buy AMD if it was capable of seeing a pullback to these extension zones to the downside. 394, 363, $311. Those are actually my buy zones for AMD. That is where I would be adding AMD to my macro portfolio. That is where I would want to buy AMD. And I'm talking about like no hesitation. I'm sure, take my money. You got it. If I'm an AMD buyer, I'm looking for 394, 364. Let's call it 314 to make it easy. Okay. 394, 364, 314. This is where I would want to buy AMD. Where would I be willing to buy? If I was an AMD holder and I was looking to dollar cost average on AMD, if I had to, I would probably start off in this golden zone here. Like if you're looking to do purchases soon, I would say getting the first batch of purchases going between 460 and 442 makes sense. It's a macro golden zone. Buyers will be present here. They're going to try to force the price up. Will they be successful? I'm not sure. It really just depends on the narrative and what the rest of this week looks like. But I would be willing to do some purchasing in this golden zone between 460 and 442. But I wouldn't be doing a lot of investing here. Maybe 5 to 10% capital allocation. Because if it does continue downwards and it gets rejected off this top side golden zone, right? If we do see AMD coming down off of this golden zone up here, getting that actual rejection. You see how we got rejected here? Getting rejected here. It easily could melt through that golden zone and start pursuing these lower 394, 364, 314. It could easily come down into these levels, which is why I would rather be purchasing down here. So if I'm an AMD buyer, if I'm someone who wants to buy AMD and I'm like looking at it now and I really want to purchase it, I would start my purchases probably anywhere between 460 and 442. If it falls down there, I would save some capital as well and keep that capital available to accumulate around 394, 364, 314, any of these lower levels down to the extension side. Now, some of you are going to say, well, Tyler, what if it never comes down to 460 or 442? Well, it just means that you missed your buying opportunity, right? The best time to buy AMD was as its indicators were showing you that it was getting a bit too overextended to the downside, right? So if we look at the HCI, for example, in the 4 hour, your best time to buy AMD would have been when it was coming into these buyer zones, this one, and printing you the green HCI. This was your time to purchase. Maybe a little something here, but this was your time to purchase. So if AMD never comes back down to these levels, it only extends upwards and continues back up, you kind of just missed your best opportunity to buy. So the best thing you can do is just slowly dollar cost average into your position. The best opportunity to buy would have been in this bright green zone, which will present itself again if AMD does start coming back down to those lower levels. If AMD, for example, does start coming back down to, say, those levels that I told you about just now, your extension levels, which would be 394, 364, and 314. Okay. So that's where I would be personally looking to purchase AMD. But I will say again, it is doing really well. It's holding up decently well right now. And I'm curious to see how this earnings call goes in 20 minutes. No way AMD goes back to 550 this year. It will consolidate around 480, and that's it. People are rotating out of chips. I do agree that people are rotating out of chips. I don't agree that AMD can't go back to 550. I mean, we're talking about this year. It got into $533 today. You know what I mean? All it takes is some sort of narrative for people to grab onto, and it easily could push up a little bit higher than it was today. So I don't particularly agree that it cannot go back up and that it won't this year, but I do agree that people are rotating into hyperscalers. I think people are looking at this narrative and saying, oh, the next rotation, the next play here is hyperscalers. And I think a lot of people are going to use this as their excuse. I think a lot of people are going to use the AMD earnings as an excuse to rotate into hyperscalers and be like, well, obviously that's where the money is. Look at what Amazon's doing at an all-time high. AMD couldn't do that. Look at what Microsoft is doing. Microsoft's up from its bottom, what? 42%. AMD can't do that, when realistically that's a ridiculous comparison because AMD didn't drop as much as Microsoft. But I could see a world in which people do start using today's earnings from AMD as an excuse to rotate into hyperscalers and prioritize their capital there. And I think that is, again, a part of the reason as to why we are seeing a nice little bounce from them today. I mean, look at what's happening with Google right now. It's giving you a bounce. Somebody said check NVIDIA. Oh, what? Oh, just this bounce over the last hour? Yeah, it was great. It's great. Yeah. Doesn't really hurt NVIDIA, does it? Not great for the semiconductor space, but doesn't particularly hurt them because they're trying to take market share from them. But yeah, I could see that. I could see people using this as a reason to. I could see people using this as a reason to rotate into hyperscalers and prioritize hyperscalers for a while moving forward until something changes that narrative, which does make me more confident in my positions. And actually does make me way, way, way more confident in my positions with a company like Microsoft, because I was questioning it. Like, at what point do I consider just taking the gains and running? I know this was supposed to be a long-term portfolio, but the fact that just in the last week, this brand new trade, this $4,500 bet on hyperscalers, I wish it was $10,000, but this $4,500 bet on hyperscalers, I mean, it's up nearly $900 in the last week. At one point, it was up 900, I think. I guess we never crossed that $900 mark. It's like, at what point do you consider just taking that profit? This gives me a bit more confidence to maintain it because, again, I think people are going to want to put their money somewhere, and I think they're going to want to rotate into hyperscalers, which isn't great. It's not great for an AMD. It's not great for a Micron if that is true. I obviously don't know if that is true, but it is something I could potentially see, and it'll make it harder for Micron to break out of this structure, right? Like, Micron's trapped in this descending structure. It'll just make it harder to get out of it, but only time will tell. Only time will tell. There's a huge resistance at 214 for NVIDIA. Yep. Very good read. It is good to see NVIDIA breaking out, though. You see how NVIDIA is breaking out of the structure? That's a good sign. And if NVIDIA can come up and, break above that $214 level, it does open NVIDIA up for a possible continued run upwards. And maybe you do see an NVIDIA trying to come up to, we could call it 218 to 226, topside golden zone. I could see that. I could see that. Let's see. Here we go. I thought a meet was going to give us a little more. It's not a CapEx. It's not a CapEx problem. It's not a CapEx problem. I don't know why people care so much. Like, so many people are talking about CapEx when it comes to AMD. The CapEx situation is more isolated, much more isolated towards hyperscalers. That narrative is there. People don't particularly care too much about the CapEx side of things with AMD. And they do a little bit, don't get me wrong, but it's just different. It's just different. It's just different. Yeah. Well, we have the AMD earnings call coming up in 15 minutes. Ashay, always love to see you in the chat. Thoughts on this take? Every big company like the hyperscalers, when they went down 10%, just like AMD did, they bounced back. But the AMD dip for it, by the AMD dip for it to go back up. It's different though, right? Because it was just a narrative. It was the narrative that took shape around the hyperscalers that caused it to go up. So yeah, if there's a narrative that comes around for semis, 100%. Yeah, 100%. It's just hard because now people are going to compare the three. They're going to say, okay, hyperscalers, software, semis. Hyperscaler smashed it last week. Palantir smashed it Monday. Semis, AMD, just got smoked today. Why? I'd rather go into hyperscalers or I'd rather go into software, right? So people are going to compare those. And so it's going to be harder for that narrative for semis to pop up. I'm not saying it can. I hope it does. It'd be great if it does for my portfolio. But Yeah, it'll be harder for that narrative to pop up. That's why I wouldn't be so 100% certain going into the AMD dip, right? It's why I wouldn't be 100% certain going in and buying this dip. I would be willing to buy the dip. Like if I'm an AMD holder, especially if my position is either neutral or negative, I'd be willing to buy in this dip. I wouldn't be going big though. I wouldn't particularly be going big though. That can be a bit risky because the narrative, it's all about the emotions. It's a lot less about facts these days. I just wonder what the media makes up for a reason for the AMD drop. They won't tell us it's overpriced. Yeah, the news doesn't really have a great tendency of literally just being like the market's being irrational, so it pulled back because it didn't beat it by their irrational expectations. It'd be nice if they said that though. Do you think people are rotating into Nvidia and out of AMD? No, not really. I mean, there is something going on here. I think more people have been determining what they want to buy, and now they're favoring Nvidia right now rather than AMD because AMD is kind of on the edge, whereas Nvidia is already pulled back. So people are favoring, Nvidia. I'm not quite convinced that they're rotating into it right now, though. To be honest, it's only down from the upside. It went up today 7%, so I don't think it's lasting. Yeah, we'll see, right? And that's the big question. Does AMD maintain this golden zone? I mean, it's really just that simple to me. Does it hold this golden zone of support? If it does, yeah, 100%. I can see AMD going back to an all-time high. I don't know what narrative it would have to do that, but it could. If AMD comes crashing through this golden zone and loses 442, I'm pretty sure you're coming to the low 400s. I'd be shocked if it didn't. So if I have purchases at 514, would it be a thought to sell? I mean, buying high and selling low usually isn't the game, right? It's like if I bought something that I like at 514 and I had the opportunity to buy more at 481, I would be more focused on buying more right now than just selling. The only reason I would sell something if I bought it at 514 and it fell to 481 is if I was swing trading it and my swing trade thesis was invalidated. So if it's a long-term investment, I don't think usually it's a good idea to just buy stuff when they're up and sell them when they fall. Everyone liked the video. To thank Tyler for his hard work. Oh, I appreciate that. Thank you very much. We will be watching the earnings call in 10 minutes. Bro, everything is down, not only AMD. Everything is pulling back right now because of AMD. Everything was good. Everything was pumping up until the second that report released. But it makes a lot of sense, right? The market is big on this narrative right now. Market's big on this narrative. And again, most things are not. I mean, look at the S&P 500. S&P 500 is up on the hour. So it's not everything's down. AMD is just down because they released a report that the market wasn't happy with. I'm happy with it because I'm not irrational. The market's just not happy with it. And that's why we got this report. And that's why we got this candle like this. And it makes perfect sense. I'm not even going to sit here and pretend like I'm surprised. It makes perfect sense. I think Lisa Su screwed up this time by moving the event in July. All steam from Anthropic and Microsoft is gone. I don't see what it will gain momentum from. Iran war is also priced in. You never know. You never know. You really never know. If I have shares at $511, should I sell tomorrow? I just answered that question. But I do really appreciate the $2 donation. So all of you, Brian Badillo, really appreciate that a lot. But look, my perspective is this: if I buy a stock at $511 and I like it, I'm a fan of it, I'm holding it for the long term, and I get the chance to buy some more, $40 cheaper, 8% cheaper, whatever it may be, I prefer to just focus on buying at a discount than selling at a loss. I think the market as a whole follows the same rough trend. I think everything will pull attack. I can see that. SpaceX 1.4 gigawatts so far. Plan to reach 2 gigawatts by the end of the year. 2027 plan 6 to 10 gigawatts is ridiculous. Built exclusively on Nvidia. On Tesla call, he thanked Micron. That Elon effect doesn't really have an effect anymore, does it? Doesn't have much of an effect anymore, does it? They hate high capex. Thoughts on APLD? I talked about that one this morning. The trick is to never sell. It's honestly not a bad game. It's really not a bad game to just never sell things. At least at a loss, you know. Like this portfolio's had moments where it's really nuked, and I've just kind of left it ride, you know. Especially in like this moment when it went negative $9,000 in like a month. Yeah, just kind of let it ride. Sometimes it's the best thing to do. Michael Saylor said that when Bitcoin was 124K, he would say he would only buy when it got to 61K. He sold. Well, in all due fairness, he sold to repeg Stretch, not because he didn't like it. How's Intel? That's a great question. A little bit of a pullback, but nothing crazy. Again, it's not having a widespread effect across the market right now, which I think is a good sign. I think it's actually a good sign for the general strength of the market. Stop. You're insane. I don't think so. Why would the earnings call impact the market? Can someone explain? So the reason why earnings for something like AMD can impact the market is because AMD is one of the leading players in the AI space, and AI is the excitement in the market. It's the thing that's generating all the gains and also generating most of the losses. And so whenever one of the biggest players and the most influential trade in the market right now does something, it impacts the whole market. But again, realistically, it's really not. Like, if we go look at the S&P 500, S&P 500 is still up on the last hour. So it's not having a widespread impact right now. This is just an Christina piece in the building. Good to see you. This is just an initial reaction that will work itself out. That's why it's best to trade on facts and not emotions. You get it. You always get it. I'm not sure, homie. I wonder if the rest of the sector will begin feeling tomorrow in the market. It might, especially it depends on what happens in it really, really depends on what happens in South Korea tonight. Yeah, it's really not, Terrence. Hey, man, I don't understand why NVIDIA always loses volatility when other semis pump. Logically speaking, shouldn't NVIDIA be one of the most important companies in the space? Yeah, definitely. And it is the most important one in the space, but it's the size, right? You got to think AMD is 805 billion or 850 billion. NVIDIA is 5.14 trillion. We're talking about a company 4 to 5 times bigger. Makes it 4 to 5 times harder to move. And there's just not a lot of hype and excitement about it right now. There's really nothing new because they've been rallying for a long time. NVIDIA has been moving for a long time. So it is very normal for NVIDIA to just not, it's very normal for NVIDIA to not really move a lot. And when it does, it does. Don't get me wrong, but it is normal for that sort of price action happening because it's size. Disco, yeah, I'm going to get to it ASAP. Disco, let me write this down. Hold on. I'll just message my team now. All right, cool. Okay. I'm 20 years old. I have 15,000 in the NASDAQ and 10,000 in a semiconductor ETF. I've got some spare cash of 1,500 and I was wondering if it'd be a good idea to buy more semicon tomorrow since AMD fell. I probably wouldn't go all in with that 1,500, but if you want to start slowly piecing in and taking a bit of a risk with the, a smaller percentage of your portfolio, there's nothing wrong with that if you believe in the trade. Stefan, what you should do is join TH Capital, our Discord, link down below, and message me in there, and we should hop on a call and chat about that because that'd be fun. I'd be curious to hear how a 20-year-old has 25,000 in the market. Join TH Cap. All right. Can you explain the R symbol is just reversing trend? Yeah. So look, I have a second. I have 5 minutes until AMD's earnings. Ashay, I will do that. AMD earnings call in 5 minutes. Let me answer that for Ashay real quick. So yeah, so on the toolkit, what you will notice, let's just go to a random stock real quick. Let's go to, doesn't matter. Let's do Microsoft. So let's just get rid of all this real quick. So when it comes to Microsoft, let me turn on the retest labels and the break labels. So all these labels do, and I'll probably see it a bit better on the 4-hour. Yeah. What these labels do, the R is called a retest label. And all it's telling you is that the price is now retesting a seller zone or a buyer zone. So if you see the price pump, then it hits the seller zone. Then it goes back down, it goes into it again. It labels it as a retest. Comes back down, goes back up, retest. Again, retest. Goes back up, retest. Goes down, goes back up, retest. It's basically just telling you that you're retesting a key zone of liquidity. So just like here, we hit this low, we hit the buyer zone at 378. The price came up and went all the way back down. It hit that buyer zone again. So this is where the buyer stepped in previously. This is where the buyer stepped in again. And we retested that buyer zone before going back up. The blue label pops up whenever you start breaking out. So the blue line will only pop up when you have a zone that you've been retesting that you officially break through, which is why you'll notice it right there, for example. And And it's only going to factor in the most recent data, but you get the point, right? So yeah, that's what the R's do on the toolkit. It just tells you that you're retesting, or it tells you that you're breaking through. Blue is breaking through. R is a retest. That's on the toolkit. And guys, don't forget, we are going to be watching the AMD earnings call in a couple minutes here. But before then, if you do not have the TH toolkit, this is the toolkit that I use to do all of my analysis. And I have a video explaining it and more information on it down in the link down below. It's going to look something like, it's going to be this here. Access the toolkit today. Give that a click. It'll bring you here. You can learn about the toolkit, the zones, the conviction index, all that stuff. Okay. But with that in mind, we are now a few minutes away from the AMD earnings call. So I'm going to get this bad boy pulled up. Earnings webcast. Okay. All right. Oh my goodness. Yuck. Okay. I am wealthy forever. I don't know. I don't know, homie. I don't know. I don't know. I've said it a few times. I don't know. All right. Guys, tell me if you can hear this in a second. Can you guys hear this music? That's bad. Let's see if y'all can hear that. Yes, yes, yes. Okay, cool. All right, look, I'm going to run to the restroom real quick. It should be starting in a second here. Mark Babel. Always love to see Marky Mark in the building. I know. I don't feel like it. Here we go.
Greetings and welcome to the AMD second quarter 2026 conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. And please note that this conference is being recorded. I will now turn the conference over to Matt Ramsey, VP Financial Strategy and IR. Thank you, Matt. You may begin.
Thank you and welcome to AMD's second quarter 2026 financial results conference call. By now, you should have had the opportunity to review a copy of our earnings press release and the accompanying slides. If you have not had the chance to review these materials, they can be found on the investor relations page of amd.com. Today, we will refer primarily to non-GAAP financial measures during the call. The full non-GAAP to GAAP reconciliations are available in today's press release and slides posted on our website. As a reminder, our second quarter 2025 results included approximately $800 million of inventory and related charges associated with U.S. export control restrictions on MI308 shipments to China. Unless otherwise noted, comments making year-over-year comparisons exclude the impact of those charges to provide a more comparable and meaningful view of our underlying business performance. Participants on today's conference call are Dr. Lisa Su, our Chair and CEO, and Jean Hu, our Executive Vice President, CFO, and Treasurer. This is a live call, and we will be replayed via webcast on our website. Before we begin, I would like to note that AMD will participate in the following events for the financial community: KeyBank's Technology Leadership Forum on Tuesday, August 11th, Citi's 2026 Global TMT Conference on Tuesday, September 8th, and the Goldman Sachs Communicopia and Technology Conference on Friday, September 11th. Today's discussions contain forward-looking statements based on the current beliefs, assumptions, expectations, including forward-looking statements regarding financial projections, business and industry trends that speak only as of today, and as such involve risks and uncertainties that could cause actual results to differ materially from our current expectations. Please refer to the cautionary statement in our press release for more information on these factors that could cause actual results to differ materially. With that, I will hand the call over to Lisa.
Thank you, Matt, and good afternoon to all those listening today. We delivered another outstanding quarter with record revenue and profitability as adoption of our leadership products continued to expand. Revenue increased 50% year over year to $11.5 billion, driven by significantly higher sales of EPYC, Instinct, Ryzen, and embedded processors. Data center revenue more than doubled year over year and now represents 58% of total revenue, up from 42% a year ago, reflecting the rapidly expanding scale of our server and data center AI businesses. Our record results mark another clear step up in AMD's financial performance and demonstrate the strength of our product portfolio and execution. We are still in the early stages of a multi-year AI adoption cycle as deployments grow across a broad set of markets and workloads, driving demand for more compute and creating a clear path to significant revenue growth and earnings power in the years ahead. Turning to our segments, data center revenue grew 107% year over year to a record $6.7 billion, driven by strong demand for EPYC processors and Instinct accelerators. In server, we delivered our fifth consecutive quarter of record server CPU revenue, with cloud and enterprise sales each growing more than 70% year over year, exceeding the outlook we provided last quarter. We gained x86 server revenue share year over year as customers expanded deployments of both 5th Gen EPYC Turin and 4th Gen EPYC Genoa families. In cloud, hyperscalers continued expanding EPYC across their internal infrastructure and public cloud offerings, including AWS, Microsoft, Google, Oracle, and others. 5th Gen EPYC Turin now powers nearly one-third of the more than 1,600 EPYC public cloud instance types available globally, as providers broaden their offerings with new database storage and AI workloads. That expanding footprint is translating into growing adoption of EPYC in the cloud, with healthcare, financial services, media, and technology companies adding tens of millions of instances in the last quarter. In enterprise, we delivered record sales in our fourth consecutive quarter of record sell-through as on-prem adoption accelerated, driven by the leadership performance and TCO advantages of our EPYC portfolio. Growth was broad-based as we won large deployments with leading financial services, manufacturing, telecom, retail, and technology companies. More than 230 5th Gen EPYC platforms are now in market from HPE, Dell, Lenovo, Supermicro, and others, our broadest enterprise portfolio to date. Looking ahead, agentic AI is creating a new growth vector for server CPUs, spanning high-frequency AI host nodes, high-density agentic servers, and general-purpose cloud and enterprise workloads. Our 6th Gen EPYC Venice family is purpose-built for this expanding range of workloads and delivers one of the largest generational performance gains in EPYC history. Built on our all-new Zen 6 core and 2-nanometer technology, Venice extends EPYC leadership in performance and efficiency, delivering more than twice performance per watt of leading x86 CPUs and up to 3.3 times the performance per watt of leading ARM-based CPUs. The Venice family includes more than 30 processors that combine leadership per core and per socket performance with a broad range of memory and I/O configurations, giving customers greater flexibility to optimize performance, efficiency, and TCO across the most widely used cloud, enterprise, and HPC workloads. Venice is in production now, with every major OEM on track to launch platforms and the leading cloud providers planning deployments beginning later this year. Customer demand for Venice is stronger than for any prior EPYC generation, and we expect to continue growing market share across cloud and enterprise in the coming quarters. Turning to our data center AI business, revenue more than doubled year over year, driven by strong demand for Instinct accelerators. MI355X adoption continued to broaden as leading AI companies scaled deployments across a growing range of inferencing and training workloads, and cloud providers expanded MI350 series availability. At our Advancing AI event, we launched Helios, our rack-scale AI platform combining EPYC Venice CPUs, MI450 series GPUs, Pensando networking, and ROCm software. Across a broad range of inferencing workloads, Helios delivers up to 15% more throughput at the same rack power and up to 30% more tokens per dollar than the competition. Customer pull for Helios is very strong and tracking ahead of our initial forecasts. In addition to our multi-generation gigawatt-scale deployments with OpenAI and Meta, we announced a new strategic partnership with Anthropic. Anthropic will deploy up to 2 gigawatts of MI450 series GPUs in Helios, with deployment of the first gigawatt beginning in the first half of 2027. The partnership includes a multi-year joint engineering collaboration using Claude to optimize workloads for Instinct GPUs and accelerate ROCm software development. We also expanded our long-standing partnership with Microsoft. Microsoft will deploy Helios at scale on Azure for frontier model inferencing across Microsoft, its AI customers, and Azure AI services. Together, these commitments broaden the group of leading AI companies and cloud providers building their next-generation infrastructure on AMD. Helios is now in production, with initial shipments on track to begin later this quarter and ramp through the fourth quarter and into 2027 to meet very strong customer demand. Looking beyond Helios, we plan to launch a new rack-scale AI platform every year, with each generation delivering significant performance, efficiency, and TCO gains. In 2027, our next-generation platform combines MI500 series GPUs, Verano CPUs, and Pensando networking with expanded scale-up domains and both copper and optical-based interconnects. Customer engagement on MI500 is very strong, with multiple customers working closely with us as they plan their next-generation AI infrastructure. We expect MI500 to deliver the largest generational leap in Instinct history, putting us on track to increase inferencing performance more than 2,000 times in just 4 years. Turning to our AI software stack, ROCm has reached an important inflection point with the performance, capabilities, and developer experience customers need to deploy AI in production at scale. The breadth of the ecosystem also continues to expand. More than 3 million models now run out of the box on AMD. The leading open models launch with day zero support for Instinct, and open source contributions to ROCm have increased more than tenfold over the past year. We introduced ROCm.ai, our new AI-assisted development platform for AMD GPUs, last month. ROCm.ai lets developers use today's leading coding agents, including Claude, Codex, and Cursor, to create, port, and optimize code for Instinct, making it significantly faster and easier to bring new models and workloads to AMD. ROCm.ai delivers more than twice the training performance and more than 3 times the inferencing performance of ROCm 7 across a broad range of models. We are also working closely with the leading AI labs, including OpenAI, Anthropic, Meta, and others, to co-optimize ROCm for their models, with the improvements benefiting the entire AMD ecosystem. Taking a step back, the overall data center market opportunity is expanding far more rapidly than we projected just 6 months ago. As AI moves into production across a broader range of applications and workloads, demand for both accelerators and CPUs is growing well above our prior expectations. We now expect the data center AI accelerator market to grow more than 45% annually to approximately $1.4 trillion by 2030. And we expect the server CPU market to grow more than 50% annually to approximately $220 billion by 2030. For AMD, this larger opportunity, combined with the strength of our portfolio and growing customer visibility, is creating a steeper growth trajectory for our data center business. In data center AI, the growing number and scale of Helios and MI450 series Instinct deployments position the business for significant growth in the second half of the year, with growth accelerating in 2027. In server CPUs, with very strong customer demand and improved supply, we now expect server revenue to grow more than 80% year over year in the second half of 2026, and more than 70% for the full year 2027, off a much higher base. Taken together, we now expect data center segment revenue to more than double year over year in 2027. Turning to client and gaming, segment revenue grew 6% year over year to $3.8 billion. In client, revenue increased 23% year over year to $3.1 billion, driven by record mobile processor revenue and continued share gains. Commercial adoption continued to expand in the quarter, with Ryzen Pro sales growing more than 50% year over year as we closed new wins with large healthcare, technology, automotive, and financial services companies. To build on this momentum, Dell, HP, Lenovo, Asus, and others launched a broad portfolio of new commercial PCs powered by our latest generation Ryzen AI Pro 400 series processors. Demand was also strong for our Ryzen AI Halo developer systems, which went on sale in the quarter. In July, we introduced our next generation Ryzen AI Halo platform, powered by our new Gorgon Halo processor, featuring an industry-leading 192 gigabytes of unified memory and can run models with up to 300 billion parameters. And to make it even easier for developers to build and test large AI models locally, we are partnering with Hugging Face to include 1 year of Hugging Face Pro with every Ryzen AI Halo system beginning later this year. Looking to the second half of the year, we're planning for a softer PC market as higher memory and component costs weigh on demand. Against this backdrop, we expect our client business to perform better than the market, driven by the strength of our Ryzen portfolio and growing commercial adoption. In gaming, revenue declined 31% year over year to $779 million, primarily due to lower semi-custom sales at this stage of the console cycle. Gaming graphics revenue also declined year over year as higher industry-wide component costs contributed to higher graphics card prices and weighed on overall demand. Turning to our embedded segment, revenue increased 19% year over year to $977 million, our strongest growth in more than 3 years. Demand was broad-based, with strength across networking, aerospace and defense, test, measurement, and emulation, and communications customers. Our embedded x86 business grew significantly in the quarter as hyperscalers and networking customers increasingly adopted our CPUs to power critical networking and control plane functions in the data center. We also continued to expand our portfolio, introducing Ryzen AI embedded X100 processors for demanding real-time edge AI workloads and the Kria AI robotics platform for physical AI. Looking more broadly, the strategy we have been executing over the last few years is now delivering strong results. Embedded x86 is becoming a significant growth driver for the segment. Our overall embedded portfolio is outgrowing the market and gaining share, and our embedded semi-custom engagements are expanding. Design win momentum also remains very strong. We are tracking towards another record year with more than $18 billion of new design wins, led by major wins with networking, data center, communications, test, and aerospace and defense customers. In summary, we delivered record revenue and profitability in the second quarter, reflecting our strong execution and the growing adoption of our leadership products. We entered the second half with strong momentum across our businesses, with Venice and MI455X now in production, initial Helios shipments set to begin this quarter, Ryzen Pro CPUs driving continued commercial share gains, and our embedded segment returning to strong year-over-year growth. More than a decade of focused investment has given us the strongest and broadest product portfolio in the industry, deep strategic relationships with the companies driving the future of computing, and a proven ability to deliver multi-generation roadmaps and ramp complex products at scale. At the same time, AI is driving demand for dramatically more compute across all of our markets. We now see the overall market for high performance and AI computing growing approximately 40% annually over the next several years, approaching $2 trillion by 2030. And we expect to grow well above the market. As a result, we are tracking materially ahead of the long-term financial model we shared at our Financial Analyst Day last November. We now expect revenue to grow substantially above our prior target of greater than 35%. And we expect to significantly exceed our $20 annual EPS target within our strategic timeframe. We are still in the early innings of a multi-year AI adoption cycle, and the opportunity ahead is enormous. We are exceptionally well positioned to capitalize on this opportunity and deliver significant growth in the coming years. Now I will turn the call over to Jean to provide additional color on our second quarter results. Jean?
Thank you, Lisa, and good afternoon, everyone. I'll start with a review of our second quarter financial results and then provide our current outlook for the third quarter of fiscal 2026. We had an outstanding second quarter, marking our sixth consecutive quarter of greater than 30% year-over-year revenue growth. Revenue increased 50% year-over-year and 13% sequentially to a record $11.5 billion. Driven by continued momentum across our businesses. Importantly, data center accounted for approximately 58% of total revenue, underscoring the continued shift in our business mix and its increasing contribution to AMD's growth. On a comparable basis, diluted earnings per share increased approximately 82% year-over-year, significantly outpacing our revenue growth and demonstrating our earnings power as we scale our business. Gross margin for the quarter expanded to 56%, up over 200 basis points year-over-year and 80 basis points sequentially, reflecting a favorable product mix and a growing contribution from our data center business. Operating expenses were $3.4 billion, an increase of 40% year-over-year, as we continue to invest in R&D to expand our AI silicon systems and software capabilities to support our long-term growth opportunities. Operating income was $3.1 billion, representing a 27% operating margin. Now turning to our reportable segment, starting with the data center segment. Revenue was a record $6.7 billion, more than doubling year-over-year and up 16% sequentially. Growth was driven by greater than 70% year-over-year increase in EPYC sales, with record enterprise sell-through and robust demand across our cloud customer base. Both unit shipments and ASP increased significantly year-over-year, reflecting the continued mix shift toward to our latest Zen 5 generation processors. Instinct sales more than doubled year-over-year with the continued ramp of our MI350 series products, as adoption broadened across the largest AI labs, cloud providers, leading AI startups, national labs, and the sovereign AI deployment. Data center segment operating income was $2.1 billion, or 31% of revenue. Client gaming segment revenue was $3.8 billion, up 6% year-over-year and 7% sequentially. The client business revenue was $3.1 billion, up 23% year-over-year and 6% sequentially, led by record mobile revenue. The gaming business revenue was $779 million, down 31% year-over-year, primarily due to lower semi-custom revenue. Sequentially, gaming revenue increased 8%, driven by higher semi-custom sales, partially offset by lower Radeon shipments. Client gaming segment operating income was $582 million, or 15% of revenue, compared to $767 million, or 21% a year ago, reflecting continued investment in go-to-market activities and an expanding product roadmap. Embedded segment revenue was $977 million, up 19% year-over-year and 12% sequentially, as demand continued to improve across end markets and the new design wins began ramping. Embedded segment operating income was $386 million, or 40% of revenue, compared to $275 million, or 33% a year ago, driven by higher revenue and favorable product mix. Turning to the balance sheet and the cash flow. During the quarter, we generated $2.4 billion in cash from continuing operations and $1.6 billion in free cash flow. Inventory increases sequentially to approximately $8.5 billion to support strong data center demand. At the end of the quarter, cash equivalents, and short-term investment were $13.1 billion. Now turning to our third quarter 2026 outlook. We expect revenue to be approximately $13 billion, ±$300 million. At the middle point of our guidance, revenue is expected to be up 41% year-over-year, driven by very strong double-digit growth in our data center segment, strong double-digit growth in our embedded segment, and a decline in the client gaming segment, with the growth in our client business more than offset by significant double-digit decline in gaming. Sequentially, we expect revenue to be up approximately 13%, driven by strong double-digit growth in both our data center and embedded segments, and a modest decline in our client gaming segment, with slight growth in client offset by strong double-digit decline in gaming. In addition, we expect third quarter non-GAAP gross margin to be approximately 56%. Non-GAAP operating expenses to be approximately $3.65 billion. Non-GAAP other income and expense to be a gain of approximately $55 million. Non-GAAP effective tax rate to be 13%, and the diluted share count is expected to be approximately 1.66 billion shares. In closing, we delivered another outstanding quarter of revenue growth and a significant earnings expansion, reflecting the strength of our execution and the strong momentum across the business. As data center growth continue to accelerate, we enter the second half of the year very well positioned to deliver continued profitable growth. With that, I'll turn it back to Matt for the Q&A session.
Thank you very much, Jean. John, we'd like to go ahead and start the Q&A session now. Please do poll the audience for questions. We ask that each caller ask one question with one brief follow-up. Thank you.
Thank you, Matt. We will now be conducting a question and answer session. We ask that you please limit yourself to one question and one follow-up. If you would like to ask a question, please press *1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press *2 if you'd like to remove a question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we poll for questions. And the first question comes from the line of Tom O'Malley with Barclays. Please proceed with your question.
Thanks for taking my question. Lisa, you laid out the Analyst Day $1.4 trillion TAM on the accelerator side. You laid out the $220 billion on the CPU side. But the share dynamics within those are very different. So I think the genesis of the question here is when do you see that crossover point happening in the data center GPU business and the CPU business? Is that something that comes this calendar year? And when you look at the relative contributions between those two buckets into calendar year 27, from a dollars perspective, where are you seeing the most strength?
Yeah, Tom, thanks for the question. So, look, we are certainly seeing a very, very strong compute market demand over both the data center accelerator as well as the server CPU. I think the server CPU is a little bit newer, and so we've been giving updates on that. As we go forward, certainly looking at our Q3 guide and our Q4 guide, we see very strong growth across both server and data center AI. So we're seeing server grow over 80% in the second half of the year over year. We're seeing very strong data center AI growth, and that reflects into our 2027. The way to think about it is both businesses are going to grow a lot. The data center AI TAM is certainly larger, and as a result, as we ramp the large strategic customers that we have on Helios in 2027, you would expect substantial growth in that business in 2027. But both businesses are very significant drivers of our 2027 growth and beyond.
And then maybe under that framework, with both growing very strongly into next year, maybe this one's for you, Jean. You obviously have some headwinds on the GPU side as you're ramping Helios, but also on the server processor side, you would imagine that you're getting above corporate gross margins there. Maybe as you look at the trade-offs to gross margins into next year, is one kind of offsetting the other, or could you maybe think that directionally, just given some of the tailwinds you're seeing with pricing, directionally with the mix shift to more CPUs, could you see a tailwind more so than a headwind into calendar year 27? Thank you very much, guys.
Yeah, Tom, that's a great question. Thank you for that. I think as we talked before, our gross margin is primarily driven by the business mix. We're actually very pleased with our gross margin progress in the first half of 2026 and our guidance for Q3 2026. I think the way to think about the 2027 is there are a few puts and takes. The first thing is, right, as Lisa just mentioned, our server business is expanding very significantly with the increased TAM and the pace of our business continue to grow, which, from gross margin perspective, is accretive to our overall gross margin. On the other side, you're right, the pace of data center AI ramp is also very important because from a revenue opportunity perspective, we see large incremental revenue opportunity from data center AI. Once it ramps, not only it adds tremendous revenue for the company, but also gross profit, even though the gross margin is slightly below corporate average. I think the mix will determine how we go through 2027, but overall, we actually feel good about how we can really navigate through the transition of the business and continue to improve gross margin to manage the balance of the gross margin. Plus, our embedded business is recovering significantly. We actually think the embedded business will give us additional tailwind on the gross margin side in 2027. So I feel really good about that.
Thank you. And the next question comes from the line of Timothy Arcuri with UBS. Please proceed with your question.
Thanks a lot. Lisa, I wanted to see if you can give us any color, just what's embedded in the guidance in terms of data center. So the question really is like, of the growth between Q2 and Q3, which will grow more on a dollar basis, CPU or GPU? And I ask because if I take your up 80% half on half number, it sort of implies that the server, CPU might not grow that much in Q4. So I'm not sure if I'm doing that wrong. Can you just give us some color there?
I'm just looking at that, Tim. Look, I think we believe that the server CPU is going to grow substantially in Q3 and in Q4. The way I would describe it in terms of dynamics is, we have very strong demand across all of our customers in hyperscale and enterprise, and we have been adding additional supply as we've increased supply throughout the year. So we're guiding the Q3 segment to grow sequentially double digits. Both server and the data center AI will grow nicely within that, and then we should expect more growth for each of those businesses in Q4 with more supply coming on for server, as well as for data center AI, the Helios ramp is just starting at the end of Q3, and it'll be much more substantial in Q4. So that should sort of give you the picture of, we think Q3 is certainly a strong quarter as we look at the very strong double-digit growth going into in data center segment, and in Q4 it will be higher than that.
Okay, thanks. And then just as a follow-up, so relative to the TAM that you laid out at the Analyst Day, I think it's a 40% CAGR out through 2030. So do you think you can outgrow that CAGR out through 2030? So is your plan to grow your revenue more than 40% during that period? Thanks.
Yes. So as we look at the overall TAM, first of all, it's a very exciting time in the compute market. When you look at every part of our business, whether it's server CPU, data center, AI, or our embedded business and our PC business, we see them all benefiting from the AI tailwinds. And beneath that, I think in each one of the segments, we see an opportunity to grow above the market. So from that standpoint, with our view of the TAM being greater than 40%, we are also saying that we will grow greater than that from an overall revenue standpoint for the company.
Thank you. And the next question comes from the line of Vivek Arya with Bank of America Securities. Please proceed with your question.
Thanks for taking my questions. Lisa, I'm curious, with all the announcements that you have made, how many gigawatt of compute does AMD have line of sight into for 2027? And what is AMD's monetization per gigawatt? I think the current assumption from everything you've announced is about 3 gigawatts. And I think from some of the warrant numbers that you had mentioned before, right, it seems to be at least $15 billion per gigawatt. So I'm just curious if you agree with those views, and then what is the upside or downside to either the gigawatt or the content assumption?
Yeah. So Vivek, there are lots of pieces to that question. So maybe let me take them one at a time. From a overall data center standpoint, I think we have given a little bit of color on 2027. We believe that the server CPU portion of our data center business will grow by over 70% year over year off of a higher base. And we believe the overall segment will grow by over 100%, so we'll more than double due to the data center AI ramping. So we do see a very significant ramp into 2027. We are very happy with our strategic anchor customers in OpenAI, Meta, and Anthropic. They are all in the process of ramping. The compute demand is high, and this is very much aligning their data center build-outs and their work with their cloud service providers together with our ramp. The way I would describe it is we have supply to more than meet the guidance that we've talked about, and the upside potential is there. The key thing is to work very closely with our customers as they're planning their build-outs overall. So I think from a Helios ramp standpoint, we're expecting a very significant ramp over the next couple of quarters. We've said Q3 is the very beginning of the ramp. Q4 is a step up, and then Q1 will be a further step up, and we'll ramp as we go through 2027. So hopefully that gives you a little bit of color on how that data center AI will play out. And in terms of the revenue per gigawatt, I think we've said double-digit billions. We're still in that range. I think there's, that looks like that's pretty much where it will be. And the key here will be, continuing to work with our partners as they ramp, because there's a demand for a lot more compute, and we would like to satisfy that demand.
Thank you, Lisa. And for my follow-up, a little of a technical question. When we look at the specs of Helios, it has, I think, almost 50% more HBM than the competition. And I think you have always had more HBM in your product. So how much of the benefit is because of having 50% more HBM? And then doesn't that expose AMD more to memory cost inflation? So I'm just curious, how are you ensuring that you're able to maintain margins, right, and get this memory allocation? And I think Jean already suggested you're comfortable with the gross margin range. But I'm curious, how much of the benefit is just because of the use of more HBM, and does that still enable you to meet your profitability targets and allocation requirements over time? Thank you.
Yeah. So look, Vivek, we're working very, very closely with our memory partners across the board on both our GPU, HBM memory, as well as just the general memory for the systems across our data center business. And what I would say is, we've worked with our memory partners for multiple years to ensure that we have a strong ramp in our business. There is very good visibility into HBM allocation for what we expect to deliver in 2027. And the other piece of it is in terms of the memory bandwidth and the memory capacity, it is one of the advantages of the AMD solutions. When you think about the larger model sizes, they really benefit from the larger memory footprint, and that goes into the total cost of ownership. We do recognize in this memory environment, though, every customer is looking at how to optimize their memory footprint. And we have the opportunity, if desired, to also modify that memory footprint if the total cost of ownership is not as significant in certain workloads. So think about it as the benefit of the memory is workload dependent, and we know a bunch of our customers are very, very happy with what that returns in terms of performance. But there are some workloads, let's call it medium-sized models, that may not get as much of a benefit, and in that case, we would address the memory footprint as you might expect.
Thank you. The next question comes from the line of Joshua Buchalter with TD Cowen. Please proceed with your question.
Hey guys, thank you for taking my question and congrats on the very strong results. I wanted to also follow up on the server CPU assumptions for 2027. So it sounds like the supply for that is locked up and you have ability to service higher demand if it continues to track that way. But I guess any help you can give us on sort of the unit and ASP assumptions that are baked in there? Like, I think investors are struggling to model the CPU market overall. So like, how should we think about, I guess, core count growth or whatever is the right proxy as we think about modeling this business? Thank you.
Yeah, sure, Josh. So let me maybe start with a little bit of grounding on the growth that we have seen so far. There is certainly both unit and ASP growth. So if you just look at our Q2 performance, when we said we grew over 70% in both cloud and enterprise, we actually had double-digit growth in both units and ASPs, but it was actually more unit. The unit growth was higher. That is very much the nature of our business. I mean, we're seeing just very strong demand from a overall market standpoint. On the ASP growth, we have ASP growth as we go to higher core counts, for certainly. But as we go forward, you should expect both unit and ASP growth. And what we have been working on very diligently over the past couple of quarters is, as soon as we saw the significant inflection point in server demand, we've been working across our supply chain. That's wafers, that's back-end capacity, that's substrates, that's all of the components to raise the overall capacity for servers. And we're seeing that play out through this year. That's one of the reasons we can raise the second half guidance. And we're seeing much more capacity coming in line in 2027 that supports the growth that we've been talking about. So you should think about both units and ASP in this framework.
Thank you for all the color there. And Lisa, in your prepared remarks, you mentioned that Helios was ahead of your original forecast. Can we unpack that comment a little bit? Was that a comment on volumes? Was it yields? And if it's yields, how should we think about sort of the first quarter or two of Helios gross margins compared to, as it gets later into its ramp? Should we expect, gross margins to improve as it ramps? Thank you.
Yes. So Josh, when I was talking about Helios was ahead of our initial forecast, it was as it relates to the overall volumes. So let's call it the amount of demand there is for Helios in 2027. It's like an outstanding product. So what we're seeing from every one of our customers who's had a chance to not only spend time with Helios, but also spend time in our overall ecosystem, there's a high confidence that Helios will be a great addition to the AI portfolio, particularly around inference. And that was my comment about higher than our initial expectations. As it relates to your comments about yields and performance and what do we expect, as we go through the ramp. One would expect that the overall yields will improve as we go through the next few quarters. The starting quarter is this quarter here in Q3, and we will be ramping over the next couple of quarters. And we always would expect that the yields will continue to improve as we go through the first few quarters, especially on a product like this, which is highly complex.
Thank you. And the next question comes from the line of Aaron Rakers with Wells Fargo. Please proceed with your question.
Yeah, thanks for taking the question. As you can imagine, I'll stick with the server piece of the business as well. At your recent event, you highlighted the server market, the new 220 billion TAM that you're throwing out there, as kind of in three buckets, right? General purpose, I think you called it or defined it as sandbox servers, and then kind of the AI front end node. So as we think about the growth that you're talking about, I'm wondering if you could help us conceptualize the sizing of those buckets at all, and how big is that kind of middle category, that sandbox AI market, as we think about growing 80% plus this back half of the year and 70% plus? How big of that opportunity do you see that becoming?
Yeah, so Aaron, what I would say is maybe let me start from the endpoint. So when you think about the $220 billion TAM in 2030, we actually see this agentic AI or these agentic sandboxes being the largest piece of the TAM. It's the fastest growing piece. It's also the smallest piece today. So in the near term, I would say that there is certainly growth in that area. But as we go out over the next 3, 4, 5 years, we think that's the largest growth in the server market. And I think the thing that is very strong about our portfolio is we believe we can grow in every one of those segments. So when you think about the types of CPUs you need for each of these workloads, you need sort of different optimization points. That's one of the things that we've really tried to point out. It's not just one CPU. It's actually a real family of CPUs that you need. From our standpoint, Venice is absolutely leadership in all of the categories. So whether you're talking about per core performance or you're talking about overall socket performance, and that gives us a very strong position across general purpose agentic AI and also the head nodes for the AI accelerator business. So from our standpoint, when we look at our customer traction and our customer momentum going from Turin into Venice, Turin was already extremely widely used, especially amongst the hyperscalers. What we're seeing is when we go into Venice, the workloads actually expand. So there are more workloads that are going to be run on the next generation of EPYC than are run on the previous generation. And that's what gives us the confidence to say that we can grow substantially ahead of the market given the product positioning.
Yep. Thank you. That's very helpful. And as a quick follow-up, I know it's probably lower on the radar for a lot of people, but I think in the past you've talked about the client business, even with some pressures in the PC market growing this year for you guys on a year-over-year basis. Do you still see that, and are you willing to give any thoughts on what you might think of 2027 on the client CPU side?
Yeah. Well, let me say, Aaron, first of all, the client CPU business, we have continued to think it's a very important business. I particularly think that local AI will continue to become a larger and larger piece of how people experience AI. So I think AI PCs will become more important. As it relates to our client business in 2026, I think our first half performance has been very strong. And although we are expecting that the market will decline in the second half, the market's actually held up better than most people would have thought. So our view is we see the growth in 2026 on a year-over-year basis certainly there. And as we go into 2027, I think we have a strong product portfolio that is coming on board to address not just the traditional notebook and desktop markets, but also as you think about a more AI-centric PC experience like what we have been talking about with the Ryzen AI Halos. So I remain optimistic about the PC market as an important way for us to reach a broader set of users and our ability to grow ahead of the market. The market itself will depend a bit on some of the components. We're all watching the component costs and how that will play out over the next couple of quarters. But I think our portfolio and our rising content and enterprise are a very positive for our client mix.
And the next question comes from the line of Stacy Rasgon with Bernstein Research. Please proceed with your question.
Hi, guys. Thanks for taking my question. First thing, I wanted to pick on something in from the press release. It says that the data center accelerates in the second half. So it grew 107% year over year in Q2. You're guiding it up like in the 80s, though, like in Q3. So how do I interpret, which is not an acceleration, so how do I interpret that statement? Is like the second half collectively higher than the 107% that you see in Q2, or are you just sort of, how should I be interpreting what you guys wrote in the press release around data center accelerating in the second half?
Yeah. Hi, Stacy. This is Jean. Good question. I think when we talk about this acceleration, we're talking about the second half versus the first half. If you look at the first half, our data center business, year-over-year growth versus the second half, we do think there's an acceleration. That's the reflection there.
Thank you for that. And then I think for my follow-up, I want to dig in a little more into the data center targets for next year. So you said like more, I think servers more than 70%, the total more than doubling. I guess what I'm asking is how much work is the more in that statement doing? Like you seem to be on a trajectory that would take you like well above those numbers. I guess just how should I be interpreting the more in the statement? Understanding that we're only in August of 26, I get it. But,
yeah.
What's on your mind there?
Stacy, you bring a smile to my face. So I would say we're trying to give you a way to think about 2027. And yes, the server CPU we're saying is more than 70%, which we think at this point is a very very strong statement, just given where the business is. And we do expect the overall data center business to be well over 100%. And the well over 100% comes because the data center AI business is going to be well over 100%, just given the strength of our strategic customers, the ramp of Helios, and all of the things that we've talked about. So hopefully that answers your more question.
Thank you. And the next question comes from the line of Jim Schneider with Goldman Sachs. Please proceed with your question.
Good afternoon. Thanks for taking my question. As you think about the early days of your MI400 series ramp and over the next few quarters, can you maybe talk about the customer diversity you expect in the early stages? I think you've noted 4 or 5 large customers that you've announced publicly. Can you maybe talk about how many of those customers will be contributing, let's say, in Q4, and how many in the first half of 27?
Let's see. So, Jim, I guess the way to say it is, we've talked about sort of the large frontier model companies, OpenAI, Anthropic, Meta. They will be consuming through a number of CSPs, so both hyperscalers and others. So the diversity of the business, and there are additional customers. There are lots of customers who are interested in Helios at, let's call it a more regular scale than gigawatt scale. So I think we'll have a good diversity of customers as we go through the next couple of quarters. And what we're really doing is matching to when the larger data center build-outs are ready. And so we are working with each of our customers on their data center plans and ensuring that we are meeting their data center plans. But yeah, I think there's a good diversity, especially as we get into the Q4, Q1 timeframe.
Thanks. And maybe as a follow-up, you mentioned data center readiness, and so I wanted to sort of test, how you're seeing your various customers and their ability to accept your products into their data centers, whether that's land, power, shell, or anything else. Any constraints that you see heading into the first half of 27 or even the back half of 27 that would give you pause about hitting your targets? Thank you.
Well, Jim, I don't think we see anything that would give us pause about hitting the targets. I mean, we feel very good about the targets. Now, when you ask me what the range could be, there is a range, and the range will depend on the ability to bring on more capacity in a timely fashion. So the way I view it is we're building sort of the entire supply chain, so ensuring that we have the entire, our silicon, CPU, GPU, networking components that go into it, all of the Helios components. I think we feel very, very good about that part of the supply chain. We are working very closely on the data center operators and ensuring that we have good visibility into what's going on there. And that gives us, let's call it, strong confidence in what we've guided for the data center AI business so far. And we're going to be continuing to look at how to accelerate some of those builds. And I think there's a clear desire on the part of everyone in the ecosystem to bring on more AI compute faster. We are seeing every day more opportunities with operators to accelerate some of that capacity, and that's much of the work that we're doing together with our customers and partners.
Thank you. And the next question comes from the line of CJ Muse with Cantor. Please proceed with your question.
Yeah, good afternoon. Thank you for taking the question. If I take your data center guide, Lisa, it sort of implies Instinct revenues of $30 billion, give or take. And so curious, two parts on this. How do you see kind of the revenue cadence first half, second half? And then if we isolate the Instinct only and start thinking about 455X and Helios, how should we think about the underlying gross margins for that business, starting in Q1 and then exiting in Q4?
I think, CJ, you're saying 30 billion. Are you talking about the server, or are you talking about which one are you talking? You're talking about 2027, right?
2027 Instinct, yeah.
Yeah, 2027.
Maybe let me help.
Yeah.
CJ, I think what you're hearing from us is that your data center AI number is probably too low. And maybe back to Stacy's question, without going into exact numbers, I think this notion of over 100% should be well over 100%. And look, as we look at this, it's a progression over the next couple of quarters. And as we go through the next couple of quarters, we expect to continue growing Helios quarter by quarter. But yes, that's the best way of thinking about it. And I'm sure Jean can work on if you have further questions on that. But Jean, does that?
Yeah.
And on the gross margin side, if we isolate to Instinct, how should we think about beginning to 2027 and then exiting?
Yeah, I think overall, when we think about the gross margin for 2027, as I said earlier, it's really determined by both the pace of server CPU business ramp and the data center AI ramp. So I actually think, overall, quarter over quarter, it could be, different mix. It could change differently. But overall, when we think about it, we are actually very optimistic about how we manage the ramp of the MI450. At the same time, with the server business continue to improve and grow significantly in 2027. Overall, I think they have a good offset in general overall. But I do think, it's important to remember we have multiple other levers from the company perspective, not only embedded business, but also client business. We continue to improve gross margin, and operation team continue to do a great job. So we'll give you more color when we get there to guide the 2027.
Thank you. And the next question comes from the line of Joe Moore with Morgan Stanley. Please proceed with your question.
Great, thank you. In the server CPU business, are you supply constrained now? It seems like the market's very tight. And do you anticipate that tightness persisting? And when you sort of think about next year, just the general ability of the supply chain to support the level of growth that you're talking about specifically in CPU?
Sure, Joe. I would say the server CPU supply chain is tight right now, and it has been tight for the first half of the year because much of this demand was unforecasted. As we get into 2027, the demand is better forecasted, and so we would expect that the 2027 server supply situation should be better than 2026. We feel very good about being able to satisfy what we just talked about, which was over 70% year-over-year growth. And I believe depending on how things play out, there may be opportunities for that growth to go higher as we get through the next few quarters.
Okay, thank you for that. And You guys are ramping a lot on 2 nanometer, and there's been a lot of focus on 3 nanometer being in short supply. Is that helping, or is it still, challenging to bring up new capacity on the new node that way?
Yeah, I think, Joe, it's always challenging to bring up new capacity on a new node. I think what makes our approach a little bit special and different is that because we're using the chiplet technology, we actually ramp in fewer wafers in the new node. And so that gives us the opportunity to, again, we're working very hard on ensuring that we get the supply necessary to meet the very strong customer demand. So from my perspective, I think all of that is work that's being done. We're certainly looking at the overall supply chain, not just wafers. So that includes back-end capacity, packaging capacity, substrates, all of those things. But we feel good about where we are to satisfy both the strong ramp in servers as well as the strong ramp in the data center AI business.
Hey, John, I think we have time for one more caller before we close out the call, please. Thank you.
Thank you. Our final question comes from the line of Atif Malik with Citi. Please proceed with your question.
Hi, thank you for taking my questions. Lisa, you guys announced a partnership with Cerebras at your Advanced AI Day and on disaggregate compute. Can you talk about just qualitatively how do you expect the sales to grow in the fast inference market this year into next year?
Yeah, absolutely. So, I think the inference market overall is growing very substantially over this year into next year. The fast inference in particular is an area which is, let's call it, starting to become more and more relevant. And so with our partnership with Cerebras, I think they have great technology. Together with Helios plus their wafer scale engine, we get a very good solution for customers. And we would expect that solution to start becoming available in Q4 in the Cerebras cloud and extend into 2027. But from our view, this is an important part of the market, and we continue to look at ways to, I would say, customize and optimize our technologies for the various workloads out there. So, we view this as just more of what we do in an open ecosystem.
Great. And one for Jean. How should we think about OpEx growth relative to that overall 40% market growth you talked about in the next few years?
Yeah, I think Lisa talked about the TAM growth at 40%, and we'll be growing faster than TAM. From OpEx perspective, we'll continue to invest given the large opportunities we have ahead of us. But you should expect us to manage this OpEx increase less than the top line revenue growth. That's what our business model is designed for, so we can drive in more operating leverage to deliver earnings per share. That is also consistent with Lisa said, our EPS will be significantly higher than $20 we outlined at our Financial Analyst Day.
Thank you very much for all the analysts and investors that joined our call today. John, you can go ahead and wrap up the call. Thank you.
Thank you, ladies and gentlemen. That does conclude the question and answer session, and that also concludes today's teleconference. We thank you for your participation. You may disconnect your lines at this time.
All right. All right, folks. Oh, shit. Hold on. Oh, bruh. Whatever. Oh, it's so annoying. Hold on. Let me see if I can. Give me a second. Do. I want to try to do this, and then do that, and then do this, and then bring you back over here. Kaboosh, kabosh. Oh, where's the onions? All right, cool. All right, folks. So let's do a little bit of a recap. I'm at 2 hours and 47 minutes. Let me go ahead and pop that up there. 2:45, 47. I always try to add the timestamps during the stream so that you guys can what was I about to say? Oh yeah, go back and watch kind of as you need to. Okay, let's do a bit of a recap here. I am already finished with the presentation that's going to go. I don't know if I'm going to make this video tonight or tomorrow. I haven't decided yet. But I have a little bit of a presentation here. I'll skip through all this. We'll go into it when the call comes, and I'll just kind of do a bit of a recap here, and then y'all can watch the full recap in the next video that I post. So in terms of the earnings report, it honestly was a good earnings report. If we have to be objective from AMD as a company, it was a good earnings report, right? Revenue, $11.54 billion, beats expectations by $240 million beat there, putting their adjusted non-GAAP EPS at $1.66, beating expectations of $1.61. Data center revenue came in at $6.7 billion. Expectations were $6.5 billion. Q3 guide was $13 billion. Expectations were $12.6 billion. Gross margin came in at 56%. Consensus was 54%. I don't know why this updated like this, actually. I just feed this thing my notes and it makes these for me. But one way or another, it was a good earnings report. It was a good earnings report. The reason why AMD's price dumped anyway, and the reason why AMD went down regardless, is simply just the fact that the market wanted more. The market wanted more. And I told you guys this. Whenever we were looking at these expectations prior to the report, I said, look, the market's going to want to see, close to $12 billion in revenue. It's going to want to see over $1.70 EPS. It's going to want to see data center revenue at $7 billion. It's going to want to see the Q3 guide closer to, $13.5, $14 billion. Said if it doesn't get that, even if AMD beats, there is a world in which it dumps. Now, look, I told you, I don't know what's going to happen. I had no idea it was going to dump, but I did tell you the market won't be happy if it sees numbers close to these. And it wasn't. The market wanted them to blow it out the water. And the reason is because they're comparing it to, of course, one, we're in the AI trade. When you're in the AI trade, everything's priced for perfection. And if it doesn't give you perfection, it's not good enough. But two, it's also comparing those earnings reports to what we got from Microsoft, what we got from Amazon, what we got from Palantir, which were realistically better than this, right? And so the market goes, oh, see, I knew the AI trade was dead. And then it just sells off because this market is very irrational that we're in right now. And the thing ran 8% today on the expectation that it was going to give you a stellar earnings report. And it just gave you a good earnings report, right? And so, of course, naturally, when those things start to come together, you do end up getting a bit of a pullback. Now, to be fair, there was something that I was digging into. Their CapEx did come in pretty high. So CapEx is generally something that's more associated with hyperscalers. To be fair, though, their CapEx jumped to by about $808 million, which was supposed to be around $230 to $270 million, which is a pretty dramatic climb. Okay. So, right, spending, not great. But at the end of the day, again, this is not the same thing as the hyperscaler narrative because the hyperscalers are literally going into debt for CapEx. Not the same thing. This is not the same thing as a company who's doing these numbers. Not doing these numbers. 56% margins on $11.5 billion in gross revenue. They want to spend $700 million, $800 million. Let them. Who cares, right? So that's what you get, right? We're in a situation in which the market was very overextended. AMD ran real hot going into today. We knew that it was facing some structural resistance. It had that golden zone sitting directly above us. I warned you guys, right? We all knew going into the earnings report that golden zone was right above us and it was a threat. We knew that golden zone topped out at 545, and any moment while you're in this golden zone, you could just see some sort of large pullback. You could just get some sort of capitulation. This is exactly what we got. But at the end of the day, right now, we're seeing AMD absorbing the pullback decently well. I am a bit concerned that tomorrow this is going to open up in the red. I could see a world in which tomorrow we see AMD start pulling back into the $450 to $420 range, somewhere down here. Some of these stocks have had a tendency recently of starting their pullback after hours, right after the earnings report, and then continuing that pullback into the next day. And who knows, maybe that's the exact reason as to why it doesn't happen, but I definitely would be, if you're DCA a little bit carefully right now, because you never really know, right? You never really know if the market's going to open up a bit negative. Remember when, Google released their earnings, that's not Google. When Google released their earnings report recently, kind of how it played out, right? We saw the initial pullback on earnings day, and then the next day is when it opened up real bad, so it's just something to consider. It's something to pay attention to, okay? But only time will tell. But one way or another, nothing that I heard just now from their conference call, I did tone out a couple times, I'm not going to lie, because they were asking questions that they already talked about. But with, with their future, with their guidance, the guidance seems fine. They're continuing to accelerate. They're expecting CPUs to continue to thrive, continue to ramp up, especially as agentic AI continues to take form. You move progressively towards robotics. they're going to be fine. And then you also consider the fact that hyperscalers are performing extremely well right now. They're going to want to double down in some capacity on what they're doing in their operations, which is a net positive for semiconductors as well. So is it a little bit crappy in the short term to see AMD's price pulling back? Yeah, 100%. But it isn't something we weren't prepared for. And it's not something that we weren't expecting at all, right? Again, this golden zone was there. And I told you guys, this golden zone is where the danger is. You get a rejection off of it. You come back down. You try to find some support. And so the game plan for the rest of the week... okay. The game plan for the rest of the week when it comes to AMD is just monitoring this attempt to come reestablish support. Is AMD capable of pulling back down towards some of these lower levels, going back in and establishing some support and maybe retesting that golden zone? Or does it start to pull down through some of these lower levels? That'll basically tell you everything we need to know. Too early to tell. There's no way to know what's going to happen tomorrow. So the best thing we can do is just sit back and watch. All right. So if you're someone who wants the dollar cost average on AMD, it's not a terrible time to DCA. I would just personally be very, very careful right now because, again, the writing is on the wall that some sort of continuation towards the downside to retest some of these lower levels, that it's there, and it definitely could happen. All right. So I would give AMD an extremely, extremely, extremely cautious purchase right now, to the degree in which it only really makes sense if you're a long-term investor who wants to DCA. Anything outside of that, I would give it until tomorrow, see how it responds tomorrow before making any moves, because the market's not going to absorb this earnings report super well. And we still need South Korea to wake up. There's still a lot that has to happen here. So I'll keep you guys updated as it all does play out, and we'll go from there. But nonetheless, it was another very interesting day, to say the least. And I'm glad that I was able to spend it here with you all. It was honestly a really good time. I had an absolute blast, and I hope you guys did too. Before we do go ahead and wrap up the stream, as we are approaching 3 hours here, I did want to talk to you guys about a couple things. The very first thing I want to talk to you about is the platform Liquid. I'm an affiliate partner of Liquid, which means that when you sign up and start trading on Liquid, I get bonuses and rewards. But the coolest part is, because I'm an affiliate, you also get bonuses and rewards. This is the platform where I do all of my long trading, all of my short trading, my buys, my sells that are swing trades. They all happen here. For example, whenever we've done, the SanDisk trade, etc., it's all on Liquid. So if you are someone who is maybe you're going on AMD and you're trying to catch a long trade on it, trying to ride it back up, and you want to do it on leverage, Liquid's the platform to go to. And if you use my link, you're going to get bonuses and rewards. You're going to get 10% lower trading fees, which is really dang good. Okay, so check out that link down below. The next thing I want you guys to check out is the toolkit. The toolkit is the toolkit that I personally developed with my team. It's this thing right here where it tells you when the price is getting too high, when the price is getting too low, whenever we're approaching a buyer zone or a seller zone. It does all of my technical analysis for me, and you can learn more about that down here. The third thing I want you all to check out is TH Capital. This is our course community. This is where you can go if you want more access to me. I have 12 hours worth of courses currently posted. I have another 12 hours worth of courses in development right now. There are also live events. For example, earlier this morning, we did the live analysis event, which is when I went in and I was doing live analysis for them. So I just went, did ticker symbol analysis for each one of them. You can also join the community. This is where you're going to see all the things I'm buying, all the things I'm selling. You can see my portfolio. All that good stuff is there. And last but not least, if you guys do enjoy the content and you don't want to go check out anything else, totally get it. All I ask, just like the video. Just like the video. Because when I end the stream, it's going to help out a ton. Look, I didn't like that. But I am going to be doing some sort of AMD recap video breaking down why AMD's price is falling as a result of it. So stay tuned for that. Thank you guys for tuning in. We have SanDisk earnings tomorrow, and I believe I am going to be live for that. So I'll see you there, baby. See you next time.